cognizant.
What is up, beautiful people? Welcome to Learn How to Trade, formerly the Midday Show. That is your girl, Adara. I'm Sharif, and wow, what a Monday it has been, Adara. We've been knocking on the door of 16,000. Looks like that door has opened now.
Swung right open, yeah.
Here we go, baby. Up 0.72, Adara, on the NQ, and a lot of the big cappers following up. We are going to be talking about some good stuff today. I forgot to update the side panel there, so I'm going to send it to you real quick while I take care of some housekeeping business that I should have done before.
Yeah, absolutely. So for one, hello everyone. Welcome back to our second week actually of How to Trade, the topic I'm very excited about, which is chart patterns. I was gushing a little bit about this last week, but I'm very excited. I was even just saying to Sharif too, just off camera here, very excited to kind of learn more about this as I was compiling the notes on this as well. I think it'll be a really fun, action-packed week, and hopefully people can learn a lot from it as well. Also, I was just looking at the little graphic that starts the show here, and I was noticing all the words, like they have cognizant up on there. Like I love like the specificities there too. So shout out to that gorgeous animation at the beginning here. Yeah, good morning everyone. Thank you all for coming. We're very excited here. Awesome. Yeah, I'm going to pass it back off to Sharif.
Only to do our duty, Adara, we are brought to you by Search Trader. Account funding of up to $1 million. Keep up to 90% of the profits. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the good folks there at Search Trader who have, by the way, 25% off site-wide for the Black Friday, Cyber Monday deal that runs from the 20th through to the 27th. No promo code needed. Give them a look. Give them a shout. All right, we are already Fabian with the topics. The Chilean Nightmare is all on his own today. Ram is sick, so we're gonna have to cut him a little bit of a break because he's doing everything on his own today. First topic of business. Now, we talked about, ad nauseum last week about, managing risk. We talked about stop losses. We talked about support and resistance. We talked about using average true range. We talked about trailing stops. We talked about the psychology. We ran that for 5 straight days. In case you missed us last week, go back. That's the beautiful thing about YouTube. Watch some of those segments. The beautiful thing about those segments is we repeat them every hour, literally. So you don't have to watch the full 3 hours. Watch the beginning on the top of the hour, and you'll kind of get a gist of what we were talking about. This week, though, a lot more entertaining. For me, I got to tell you the truth. If I was a student, I'd be much more excited to talk about these chart patterns than I would about risk management, despite the fact that risk management is very important as well. First on the list, ascending triangles.
Yes.
AKA flat top breakouts.
Or ascending wedges or what have you. Lots
Whatever
of different
you want to call them.
Terminology, but yeah, very exciting and a very good trade pattern to know. And one of the first ones that I kind of became familiar with when I started on the midday.
Yes, there you go. And they're not too hard to spot. I mean, essentially, we're going to talk a little bit about it now, but what you are looking for is a series of higher lows, easy to spot. You're looking for troughs. Each trough has to be higher than the previous trough, and you're looking for a general flat top area, a key level of resistance that you're having trouble breaking through. Now, like I talked a little bit about last week, it's not a hard and fast rule. If it's that $16 flat top level, it doesn't mean the candle can't wick through 16 bucks, but what you're looking for are key areas where sellers are stepping in and overwhelming the buyers and saying, you're not coming up above this point, down you go. And that's what you're looking for, a repeat of that level once, twice, and even OB thrice. Yeah, we're going to talk a little bit about it here. Let's talk about the actual definition first and foremost of an ascending triangle, an ascending wedge. They are synonyms, guys, okay? The ascending triangle is a bullish continuation pattern. We're going to talk about what continuation patterns mean versus reversal patterns a little bit later on. Is a bullish continuation pattern that signifies a breakout is likely where the triangle lines converge. I'm going to show you visually in a second. To draw this pattern, you need to place a horizontal line, the resistance top line, the flat top break, whatever you want to call it, on the resistance points on the price action, and then draw an ascending support line, the uptrend line, along the support points. So we're probably going to need to look for one right now because I don't have one ready at my disposal at the moment, but I'm sure one will come along in a sec. In the meantime, I can show you this one that's already drawn out. Here, let's bring in this bad boy. Chilean Nightmare, come to the screen if you're able to. There we go. All right, here's what we're looking at, guys. Look at this. Clearly, in this case, I don't know what stock this is, but you have a big move down on this pattern here, and you can call this trough A, okay? Let's call this area here trough A. And then another big move down. This is trough B, clearly making a higher low than the previous occasion, and then let's call this bad boy trough C. Even though it's not much of a trough, I could probably choose a bit of a better...
It's like a baby dip, I guess.
Exactly, yeah, a baby swoosh, a swoop, a skosh, whatever, you know, descriptive word you want to call it. This made, we went down here and we held the uptrend line only to break through that clear resistance level once, twice, 3, 4, 5, 6 times, 7, and on the 8th time, it got broken, okay? And, you know, it's a little bit tough here to define a specific rule. For me, I'd like a decisive close above this flat top break, okay? Now, there are different rules that you can use. There is the 3% rule, meaning that it has to close above the resistance line 3 percentage points higher than what the value of this flat top is. Or there's the 3-day rule, where you need 3 consecutive days above closing that line. And now, you know, all these patterns are fractal, meaning that you can use them on multiple time frames. So when I'm saying 3-day rule, that you have a 3-day close above that trend line, if you're trading on the 5-minute chart, what you're going to want, oh, hello, Brendo. What you're going to want.
Yeah.
It's okay. The Chilean Nightmare is on his own.
No, I love that. Yeah. I just thought it was a fun little cameo.
Yeah, for sure. And that's Kat, by the way. Everybody knows Kat. We're gonna pay homage to Kat over here for a second.
Like and subscribe today.
Yeah. Can tell I have attention hyperdeficit disorder. All of a sudden I'm talking about flat tops and then it's hola, like and subscribe today. No, but for real, if you're trading on the 5-minute time frame, what you'll be looking for is 3 5-minute green candles or whatever above that trend line. So these chart patterns are fractal, meaning you can trade them on the 15, the half, the daily, the weekly. It doesn't matter. They apply on all different time frames. And if you're going to have a specific rule like the 3% rule, the 3-day rule above that break, you can absolutely apply it whatever time frame you're working on. So to recap, Adara, higher lows, and a consistent flat top.
And a consistent flat top. I also have a question about these actually.
Absolutely.
Would you say it's helpful then if you're charting it, let's say I'm charting it in the 5-minute, for example.
Go for it.
Would it be helpful to also get confirmation on like a 3-minute, like a 10-minute, like, or, because I know you said it can be charted on different time frames.
Absolutely.
I guess what I'm asking is, in a kind of a long-winded way, is it better to kind of see on one time frame, or is it I guess going to be more decisive flat top break if you have confirmation on other time frames?
And that's an excellent question. Okay, so here's the answer to that. What you want, you always want multi-time frame confirmation. So whatever you see on the 5, you want it confirmed on the whatever other
charts you use.
But
yeah.
What I would say to you is you don't necessarily have to see that pattern on the other time frame. What you're looking for is confirmation on the other time frame, not an identical view.
Okay.
So if you see a flat top breakout on the 5, you may be looking for some other type of confirmation on the half, on the daily, a key resistance level is broken, or a bullish engulfing candle. I'm just giving you random things that you could be using as other, or breaks above the 200, or it holds VWAP, whatever the situation is. But you don't have to necessarily see the same ascending triangle on the 5 as you see it on the 20, but you are looking for multi-time frame confirmation.
Okay, and I guess would that then be the same if it's like, for example, I don't want to get ahead of us, but if we're talking about descending triangles, would that be the same kind of thing you're looking for then? Like for example, I guess it would be the opposite, it would be bearish.
Yes.
So like if you're looking for confirmation, then look for like some kind of bearish movement.
Absolutely.
Okay, perfect.
Well said.
Thank you.
Perfectly well said. All right, let's just go back here and look at this super chat from our friends, the Hayes Records. My man, 199 super chat. 243 for the day, Silverback Gorilla. Loss was greater than 10%, or is that less than 10%, pardon me. W's were 30 plus, L, F, G, I'll let you interpret what that means, but shout out to you, my man. Shout out to Hayes for printing on the day. Happy for you, my friend, absolutely. And any day that our viewers are printing is a good day for us because, well, that's why we're here. We're not here to show people how to lose money, right? So that's the look there. Thank you for the super chat. All right, so that is the ascending triangle. Now we're going to circle back to this a bunch of times.
Oh, yeah.
You know, every hour we're going to recap this, and we're also going to point it out in the trades that we take, but we're going to get through the first little batch here. There. Second on the list, believe it or not, it is the descending triangle, and it's exactly the same thing as an ascending triangle the opposite way. The best descending triangle that I like to use is Lee Auto, okay? And this was the one that Neil pointed out many different times on the show where we had lower highs, lower high on Lee Auto, but that 38 level was absolutely holding. And here's the look on Lee. Oh, look what I can do to Adair. Look, because people complain they can't see the ticker.
Oh, you can enlarge the ticker. Now I can show
border. Look at this.
And there's colors.
Oh, and there's more. And I can change the thickness of the border and everything.
I love that.
And now everyone knows I'm looking at Lee Auto over here. Oh, there we go. Okay, guys, so this is the Lee Auto chart. And this is the flat bottom break that I really like to use as a key example. We top out here after earnings on Lee Auto back in August. It's a great look. We get to that $48 area, and that's where I punched long. Okay? I punched long literally at highs. Thankfully, it was for small share size, and I was able to add much more in the 30s. But we make that 48 top. Then we move all the way down uninterrupted to that 38 level. Now, the 38 level doesn't need to make any sense to me. It just has to appear, okay? It doesn't need to be a previous key level of support or resistance. It doesn't have to be the 200, it doesn't have to be the 50, but it just has to show me I am an important level. And how do I discern that? By multiple touches at that level. And you got it here in spades. Look at the amount of holds that we have here at 38, all of which were bought up. And then we got a little flurry of buying towards the end of August. We got all the way up to that 43.5. And that was, geez, I keep forgetting to put the what's it called?
The Unity?
Yeah, the Unity software. I'll do that in a sec. So we get all the way up to that 43.5, and that's as good as we could do. That's crest number 2. So this is crest number 1. Crest number 2, and guess what? We move right back down into that 38 level again. And again, we don't break it. And then towards the middle of September, we make another pop up. This one more anemic than the second and far more anemic than the first. We get up to that 41.5, general 42 area, and we make our way right back down to 38. And then we make one last attempt here to take 40, which is another low. So now you have 4 lower crests. And then finally, that bottom drops off that 38. And look where we go. Did it ever drop off? And then you got all the way down to 31. And then it's been bought up from there. And it's been having a hell of a time since that time. But this is your prototypical flat bottom break, descending wedge on Lee Auto. And it's the one that I'm going to use over and over and over because it's the one that I was involved in myself, and I think it's a hell of a level. And it's one that I watch literally every day. Is it going to break 38 today? Is it going to break 38? And then finally it gave up the ghost, as Neil likes to say, in the end of September there.
Yeah, this is a really interesting one, and thank you for using that example because you're right. I think it's very clear to visualize it in that way. What I like about that example too is it's not even just like straight. It's kind of, I guess, not the prototypical one you would expect because we do have, a couple times where it'll almost touch the same level again and then go back to the downside, right? Like I find that one to be really interesting. The Lee Auto one, so I think that's interesting. I just have Tesla up here, which I guess is not really an example. That's just because it's kind of cut to this. Yeah, this one could be, it looks almost more maybe like a symmetrical triangle, which we'll get into in a minute with this kind of lower low that we started with. But from this point, I guess we're seeing on the 5-minute at least almost a flat bottom, but we shall see what we shall see. Yeah, it's interesting too. I guess like the descending and ascending are basically just inverse of one another, right? They're going to, with the ascending, you're seeing generally a bullish pattern. Descending is a bit more bearish from my understanding. And yeah, I love that example of the Lee Auto because it is like kind of the traditional shape of one, and it's an interesting story too of how we got there, starting with the catalyst and then kind of making our way down from that point.
Okay, And so there was one point that I neglected to mention. So these patterns are what we call continuation patterns. And what the hell does that mean? Okay. Well, it basically means that it's going to continue the previous trend. Okay. So let's bring in the first example over here with respect to the ascending triangle. Okay. So this one means basically what you're seeing is a series of higher lows. That in and of itself, in my opinion, is bullish by nature because it's showing that on every move down, incrementally, the buyers are overwhelming sellers at a higher and higher and higher point, meaning that, you know, there is more demand for the stock on every subsequent downturn. There seems to be more demand for buying than for selling. However, you have to look at the previous trend before the ascending or descending wedge took place. What was the pattern then? Were we in an uptrend? Were we in a downtrend? Why? Because the ascending wedge and the descending wedge are continuation patterns, meaning that they continue the trend up. So it is not an anomaly to see an ascending trial in a downward trend, but it is less likely to be a bullish pattern if you see it outside of an uptrend. So again, that was a bit of you know, I'm jumbling my words there. So you're going to need to see, to have, you know, a good degree of confidence in the trend, an uptrend, and then a very clearly defined area of resistance, which is the flat top, right? Before you see, you know, that breakout. So you're going to need to see an uptrend first, and then a series of higher lows, all with a flat top. And then that will break out in the direction of the trend. Conversely, when you have a descending triangle or a descending wedge, you're going to need to be in a downtrend, right? And then see a series of lower highs with a flat top, with a flat bottom. That isn't a hard and fast rule, though. But they are more accurate when they are in the direction of the trend. An ascending triangle in an uptrend and a descending triangle in a downtrend. Now, let me bring back Li Auto. This is one of those cases where you didn't get the descending triangle or the descending wedge in a downtrend. You got it in an uptrend. Look how long we were moving up. Essentially, from November 2022, we were in a series of higher lows and higher highs where we got to that, you know, almost all-time high. The all-time high for Li Auto is around $50, just a bit short of $50, $49.21, right? And in fact, you broke above the July 22 highs, which were the second highest point. So this is one of those ones where the hard rule of always seeing a descending wedge in a downtrend didn't hold up. But you know, in this case, it absolutely made sense. That's what I want to point out. You're not always gonna get what you want in terms of, you know, they're always showing up in a downtrend or in an uptrend. In this case, it was an outlier where you had a descending wedge in an uptrend. I hope that kind of helps a little bit explain some of the things that I've just been saying right now. So two different patterns there so far before we get to the third. Go ahead.
Yeah, there's actually a really interesting question here from Free Rhymes with AMC. Do you draw the ascending, descending lines on the wick or the bodies of the candles?
Very good. No, you know how much I respect the closing prints much more than I respect the intraday wicks. My answer to you, without even looking at the chart, is always respect the closing prints. That is the committed money. That is the money that stays overnight, not the intraday money. So for me, closing prints far more important than intraday wicks.
Would you say that's true as well for then whatever time frame you're on? So if you're at the 5 minute, then are you honoring whatever the candle closed at on the 5 minute or whatever time frame you're using?
Sorry, can you repeat that? Because
so yeah,
it was in my ear.
Yeah, I worded that kind of poorly. So I guess when you're like, I guess one day it makes sense if you're looking at the time that like the closing of the day. But I guess then, for example, this for a 5 minute, would it be whenever the candle closes? So at the end of that time frame, would that be the point then that you would honor?
Yeah, see, I get what you're saying, because like
I think I worded it kind of weirdly.
No, but I completely understand. So even like if it's a non-daily time frame is what you're asking, right? If I'm charting off the 10, off the 5,
yeah.
I'm still taking it off the closing print.
Makes sense.
Yeah, the closing print to me is much more important, and that's something we talked about in the futures. Remember when we look at like the 100-point level in the future, and we look for those descending or those wick candles below a certain level only to be bought up over and over.
Yeah,
and
when that's when you see, yeah.
Exactly, and then we focus on the closing print there. So very good question, I appreciate that.
That makes sense.
Yeah, so just had to take a quick test trade there. I'm not in any trades, by the way. I don't know if Nadera is in any trades.
No,
We're
I'm
gonna
waiting
get to
for a
some
point
trades
of
soon.
entry. I don't want to rush anything. Also, then I have, I guess, I've got another question as well.
for it.
So I guess at what point can you tell I guess I'll use this Rivian sort of has a flat top, ascending wedge sort of thing forming. Shout out to people in the chat mentioning that one, so I pulled this one up. I guess at what point do you decide then when to enter? Because like even the Lee example, it took like a couple wicks for this one to actually fully break the flat bottom, right? So then I guess that would be a short example. This would be a long example. But I guess maybe this is probably depends on the time frame and also the stock. But I guess at what point can you tell, oh, this is about to break, and when would you kind of plan your entry?
Right. I'm going to go ahead. Look, I'm looking at the Rivian chart right here. Let me put in the ticker. I'm going to say this is not a descend or an ascending wedge, despite the fact that we do have higher lows.
Okay.
And a bit of a flat top there at 1710. I don't see enough of it, to be honest with you. I think that this is more a consolidation, or maybe like a little bit, yeah, this is, not everything has to be a pattern. This is kind of sporadic.
That's a good lesson too. Now, there's sometimes like you can't make patterns out of molehills, right? Sometimes there's not going to be something.
Or in this case, we could do the next headline, or sorry, the next topic there is, which is a compression pattern. So this was a compression pattern until it broke out in the direction over here. But again, not everything, not all the action we see on charts equate to patterns. Sometimes it's just going to be a lot of, just price action, but there's no discernible pattern. So on Rivian today, I mean, it's a nice look up. We're up over 2%, but I got to tell you, I don't see much here in terms of, fitting into the mold of what we're talking about today. So before we go on into the next topic, let's see what other people have to say here. Favis Sharif nicely explained regarding closing price is more important than the wick. Couldn't agree with you more. Rachel, you always do a good job of breaking down the mechanics for beginners. Sharif, thank you. Appreciate you, Rachel, for that. Very nice of you to say. Let's see what else other people are saying here. Any questions, guys?
I saw a question from Patrick Langlois. These patterns are good for charting, but what is good for real-time trading to have the best edge?
Real time?
Yeah, I guess. I mean, I guess like usually it would be, sometimes you have to use a multitude of, because we were talking last week, like it really depends on what indicators the stock is interacting with, right? I think to some extent.
Yeah.
So yeah, it might be like depending on what stock as well.
Oh my God.
Yeah.
So you look at the way Sean trades. Look at the way Neil trades. Look at the way I trade. The Kenobi, the Obi-Wan, the Kenobi, the Mad One. Everybody has different
different
styles and their own different edge, right? Sean loves his big text. He loves big opening prints and getting them off key levels. That's not my style at all. It's too volatile for me at that time, and he thinks to slow down. So I don't want to say that there's one hard and fast rule for edges, but yeah, very good question about that.
Yeah, that's a really cool question.
Yeah, going down here, Sharif, what's in the mug? Looks yum. Well, it's a Toronto mug, my friend, right there, and it's got coffee in it, specifically a cafe barista. Yes, that $12,000 machine that we have there makes something called a cafe barista.
What does that mean?
I don't know, but it's really good.
Is it like a barista in the $12,000 machine, like a little AI barista? I need to look up what a cafe barista means, because that's a beautiful name, and
Tastes good.
It could mean literally anything.
I think it's a little bit stronger than the regular coffee too, quite frankly, I tell you the truth, because I get a little more excited off it there, Dara.
Very cool.
Apple is pumping up, and I couldn't be happier. The long-term account is absolutely printing, and the Katina Man is at what's your price? The Katina Man is long 191 on AAPL. It's now reaching 191 in the third. For whoever's following along with Sean's trades, we'll be updating you as the show goes on, but not for long, my friends, because soon you will know exactly what the Katina Man is trading. You'll know when he got in, at what price, Neil, of course, as well. And all that will be made available for you while this show goes on. So, yeah, that'll be coming very, very soon. It was supposed to be today, but, technical difficulties. We want to make sure the product is sound before we, put it out there.
But of course, yeah.
Yes, Tony, Max is still there. He's back there. He's wearing his toque. He's having a hell of a time. All right. $12,000 machine, John. I promise you, it's not a joke. We actually showed it on the show, and we had to pull it up to make sure that it was the real deal, and it took a lot of people by surprise. Dushan, I hope I didn't butcher your name, my friend. Sharif, when you trade, do you do tape reading? Do you follow level 2? Absolutely, I do, but it's not my number one thing. I am more of a chart trader than I am a book trader. That is kind of the opposite of Obi. Obi really likes to look at the book and focus on level 2 as opposed to really, focusing on the charting. I hope I'm not, mischaracterizing him, but that's kind of been my observation of his trading. I got to tell you, they both have their merit. On this floor over here, when you come in, they really do try to teach you level 2 trading a lot more than chart trading, but, what can I say? I'm a bit of a rebel that way. Keeping going on here with some of the questions. Sharif, thanks, appreciate you guys. All right. The Katina man is gonna confirm with everybody that it is 12K. He's gonna pull it up. We've pulled it up before. He's gonna find it real quick, and then we're gonna show you guys it's the real deal. Sharif, what is the best way to mark a train? What? I don't know what that means, man. I don't know what that means. I don't face. Aaron, 15 eggs a day. Man, you believe Neil? It's 12 eggs. You told everybody I ate 15 eggs. Now everybody is making fun of me. What does that mean, Sharif? What is the best way to mark a channel? Okay. So I'm assuming you're talking about upward, downward, or sideways channels. First and foremost, we're going to get to that, but I'm going to give you a quick synopsis of it. If it's an upward channel, you want to mark the bottom prints first. And then if it's a downward channel, you want to mark the top wicks or the top price action first, and then to see if it corresponds to the bottom side. Okay? So that should be your first starting point. And a trend is a touching of 2 points. Okay? So there has to be at minimum 2 points for the trend to touch or minimum 2 touches for there to be a trend. So we're going to go on to the next one. Symmetrical triangle. You want to take this one?
Yeah, for sure. So I'm just going to pull up my notes on this one here. So basically, yeah, so you have a diagonal falling upper trend line and diagonal rising lower trend line. So that Rivian example was decent. I'm going to see, I have kind of a non-specific one on these notes here. So this is kind of the symmetrical triangle here. So basically, it has, the other ones, you have like a flat bottom or a flat top. This is, you have basically, it's kind of a compression pattern, right? In that you do have the, we have the highs coming down and the lows rising. So, you know what, honestly, Eli Lilly, I just have it up, but it's kind of sort of doing this. So you have this bottom line here from open that is, you know what, I will actually physically chart this. Let me get the little chart thing here. So we have a bottom and we have, well, I guess this one's just kind of rising in general. But I mean, like, we are yeah, I guess this isn't like the best example in the world as I actually try to chart it out here. I apologize. It's kind of more like heading up here. But yeah, in the same, like the bottom here, definitely we do have this kind of higher moment. I guess the top is a little bit different, but I'm going to see if I can find a better example. That Rivian example was not bad either, if I can pull this one back up. There we go. Yeah, so I guess, like, yeah, Rivian kind of doing that as well, at least before. And then we actually did have a breakout. So this is actually a really good one. I will chart this. Yeah, so, yeah, Sharif mentioned this example earlier, but this is definitely an interesting one where we did have on Rivian, this is the 5-minute, by the way, too, because we said, like, you can use different time frames. So we did have, we got up to this around 17.1. Then our next high was about 17.8, 17.07. Then we kind of got to this, just around 17 area, and then we broke very much the upside. We broke that earlier high as well, right? So I think this is definitely one to keep an eye on. We also had this bottom trend line as well, where we had the bottom of 1682, 1684, 1687. So we're basically having a smaller range until it breaks up to the upside, in this case for the symmetrical triangle. And then also, I guess I have a question as well.
Yeah.
So if it was, because this one too, you have a symmetrical triangle when we're up on the day. So would it be more likely than if this was down on the day and we had a symmetrical triangle, would it be a better chance it would break to the downside, or does it really depend?
Yeah, it does.
Okay.
No, because it is a continuation pattern. So it's a very good question. So basically, resolves in the direction of the trend. So if you had a compression pattern after a big move down, it's more likely than not that you're going to get that continuation pattern and a break of the downward trend line.
Okay, that makes sense.
It's not a hard and fast rule, as we just saw in Liotto.
Yeah.
Where we saw a descending triangle after a big move up. So we didn't see the move down and then the flat bottom break. We saw a big move up and then the flat bottom break. So these are not hard and fast rules, and you have to take them contextually. Now, there was a very thorough analysis done of chart patterns by an individual who I can't remember his name. It was in the Chartered Market Technician first book, and it was the most comprehensive analysis done to date, and it shows you, I'm going to probably bring it for tomorrow. It shows you the likelihood of the pattern being successful in the given circumstance. So it'll show you. So for a reverse head and shoulders, for example, where we see an upside down head and shoulders, what likelihood of success it has after a move down, after a big downtrend, versus if you were to see the inverse head and shoulders in a big uptrend. It'll show you like the likelihood for success, and so you can base your analysis off a quantitative analysis, not just eyeballing it there. So the compression pattern is one that we see a lot, and I'm going to try to say maybe there is one here on TSLA, even though I'm not convinced entirely. I need to see a little bit more. Now we break up, we have an IB high of around that 236 level. We make another lower high over here at that 235, and then look at this closing print at 234.75. So it's a series of lower highs. In the opposite direction, we have higher lows here compressing a little bit, but I want to say this is more akin to the Rivian compression pattern, which isn't really, it's not really convincing me, to be quite honest with you. And we had a I want to say a gap down on Tesla, but not really. I mean, we just sold off initially on the bell, but we're still flat on the day. So it's not like this compression pattern is in a downtrend or in an uptrend, right?
Yeah.
So, and obviously Tesla selling off because there was some rumblings on Friday about, certain, ads appearing with hate speech, this, that, and the other, prompted a lot of big corporations to suspend their ads on, I was going to say Twitter, but I meant X, etc. So, what does that have to do with Tesla? Well, Elon Musk is the face of both, and a lot of people are investing in Elon Musk as opposed to investing in Tesla.
That's a good point.
Yeah, well, that may have some repercussions on the day, hence probably why Tesla is a bit flat while all the other big cappers are up on the day. In any event, we don't have to look for direct examples now as they present themselves to us while we're trading. It'll be interesting to see if we can get anything here.
Yeah, I think it'll be like a fun. I think that's part of why I'm excited about this week too, is because with risk management, I mean, we could talk our way through trades, right? But with the triangles and the patterns, if we actually see a pattern live, we can kind of like a Pokemon catch them all, find it, and be like, I don't know why I use that analogy, but you can be like, oh, like look, this is happening in real time, because like using examples too from the past is interesting. And I love that Liotto example, but I think it'll be really cool to kind of, especially for me as I'm learning, to kind of challenge myself and see these patterns and see how they actually do resolve in real time. So I think it'll be like a really fun week, and hopefully people can get a lot out of it as well, which would be, obviously that's the goal here, right? Yeah.
Guys,
exciting times.
I'm going to have to do this because we are anemic for likes today. So my friend Neil,
like and subscribe on this channel, and never forget.
I love the intense like Toronto skyline background.
Absolutely.
It's great.
Toronto's a beautiful skyline. Guys, hit that like button. If you don't hit that like button, the algorithm has no idea what we're doing over here, and it thinks that we're talking out of our rear end. Smash that like button. Let the algorithm know that you like what you hear and that you're participating, so others know about it as well. The more we expand, the more we give back to you. That's just the way it works around here. Yeah, make sure to like and subscribe too if you haven't subscribed, because you won't get any of the notifications. I know I subscribed. Appreciate you guys for hitting that like button. All right, I just want to talk quickly about this futures trade here before we go on. And I haven't taken a trade on the future, but I'm awfully interested in one. And this is the reason why. What do we talk about when we see that 100-point level? Say we clear this 100-point level, which we did, the 16,000 level. okay, which was a clear area of resistance earlier on that big move up, move down, we hold VWAP, and then we come and we break it. Now, look at this. Former area of resistance now acting as support. Look at all these wicking candles. These are all 5-minute prints, okay? So from here to about here is about half an hour. So this is half an hour worth of action over here. All the prints have been above 16,000 and all the wicks down have been immediately bought up. Now, this doesn't mean, like, for sure that we're going to run up, but it is an indicator that I particularly look for here to see whether that level is being respected and whether we're going to hold that level and continue to trend up. So I'm interested here possibly in a dip at around that 16,000 level to get my beak wet on the NQ, or the MNQ, pardon me. So I'm probably going to set up a dip trade in and around there, but good look there on the NASDAQ so far. Quickly here, let's have a look at what some people are asking. Bill auctions have started, says MA1M3 Vent 86. Wow, that's a hell of a name you have over there. Let's have a look at what, we didn't do any housekeeping. We're going to do some housekeeping quickly here. We have the 3-month and we have the 6-month, all of which have one bull out of 3. The 3-month came in the yield below the previous, which means the demand for the note was higher. We had a 5.270 print. Previously, we had a 5.285 print. So that's good. The 6-month also comes in below the previous print, 5.27 last time around. We get 5.23. So that's a good look. And we should also mention an important 20-year bond auction at 1 o'clock that gets 2 bulls out of 3. We saw what happened with the 30 last time.
That was nuts.
That was insane.
That was scary.
Yeah, so with these auctions can definitely move the markets, especially the more longer dated treasury notes. And today we get the 20-year at 1 o'clock. Make sure to set like a reminder, because the market can absolutely move at that time. 1 o'clock, 20-year bond auction. Last time around, we had a 5.245 print. We'll see what we get this time around. But yeah, interesting look here on the futures, and we're probably going to try to bamboozle our way in a trade here. Bob Dub, I've seen a lot of fake outs this year where it will break a pattern, run stops or bids, then wick in reverse, probably some kind of Max Payne algo. You never know, my friend. I'd like to see an example of what you mean. If you have an opportunity, maybe you're able to get some of those charts that you're talking about so that we can kind of do an analysis of them.
Yeah, that'd be
fantastic. Fun. Yeah, and you need only tell me the ticker and then where to look, and then I can pull it up myself. But yeah, shout out to Bob Dub for that. Moving down here, looking at what other people are saying. Make sure to tag Adair and I if you have any questions. John G. Sheffield, will Dish squeeze like AMC insiders loading up? We're going to get to that in a little bit, John. Right now, we're just taking questions with respect to the subject matter of the lesson today. So we'll get to that in a sec. Havana Woody, small cap gapper. All right, we'll get to that as well later on. But we're just focusing right now on these chart patterns.
Yes.
I'm just looking here to see if there's any questions being asked. No.
Okay.
So any questions yourself for any of these?
Yeah, let me see. I usually have some. Sorry, my throat is doing a thing. Written down here too. I'm seeing as well here in my notes that it's apparent, like, I guess I'm asking, I know volume will be like its own thing for a later week, but I guess how does volume play into
very good question.
Looking at chart patterns? Because I had that in the notes, so I was like, I may as well ask that.
Okay, you're going to get a bang for that one. Okay.
Thank you.
So, look, it's not a hard and fast rule, but what you want to see is the breakout of the ascending wedge, or a triangle as we calling it, or a descending triangle, or whatever. You want to see the breakout through that level supported by volume. Now, ideally what you've had is, for example, an ascending wedge, you've had that flat top. It's a flat top breakout, right? A synonym for an ascending triangle or an ascending wedge is a flat top breakout. What you've had is, in the case of whatever it is, you've had that, say, $20 level. That was your flat top. And every time you get to 20, it rejects, it moves back down. It rejects, it moves back down. Well, that's not happening for no reason. That means sellers are there. okay? Sellers are there and they're stepping in either to take profit or people are initiating shorts. So ideally, what you want to see when the buyers overwhelm sellers at, say, that $20 area, it has to be supported by volume. It's not a hard and fast rule, but it's another confirmatory indicator that you're looking for. If it was with anemic volume, you have to look at it with some suspicion, because it just means, well, maybe we broke out because it was a low volume day and there weren't enough sellers to move the bad boy back down, but maybe there will be in a couple of days or on a more liquid day. So what I want to see is absolutely a great question, the breakout supported with volume to show that it was a legitimate break in that direction.
Okay, that's a good point. That's also, I think, goes back to my earlier question too, with regards to knowing when to enter and when the trend is legit. Yeah, I think I've been trying. I don't usually pay as much attention to volume as I should. It's something I'm still working on. So yeah, I think it's interesting too, like looking at how there is, to shout out OB, confluence between volumes. These are others indicators, right? Volumes and patterns and, you know, what moves. Because like I said, I keep going back to this, but I think it was really informative for me talking about how not all stocks interact with all indicators, right? And so I think thinking about that and thinking about also how these interactions are further compounded and become more interesting when you look at also the combination there of stuff like volume, I think it's really important, and I think it's been a good opportunity for me to kind of learn how that all interacts.
That makes absolute sense, and thank you for asking that question because it's actually very apropos. DK, how is the oil price calculated? Supply and demand, I'm assuming. Sharif, Mike Angel asked, what's up with NVIDIA? They got earnings this week, man. So yeah, hold on to your horses. You need only look at the chart pattern on prior earnings day to figure out why you need to hold on to your horses. But hold on anyway, because we'll see what Jensen has for us this time. And I've got my leather jacket right there, and I'll wear it. You don't even know, I'll wear it. Let's see what else people are asking here. Sharif, on your long-term account, do you prefer to DCA or buy a lump sum when there are corrections and crashes like the beginning of this year and last October? Very good question. Not really what we're talking about right now. But what I want to say is you got to be really good to figure out where the exact bottoms and where the exact tops are. So I'm going to say more often than not, if you like a particular stock, I'm not talking about swing trading. I'm talking about investing in names that are fundamentally of interest to you, not technically of interest. And to figure out what the difference between fundamentals and technicals are, just do a quick Google search. Dollar cost average. You're probably not that good to figure out where the bottoms are. And if you are, fantastic. I'd like to give you my money. No, in all seriousness though, you got to, every time you dollar cost average, there has to be a plan, right? And if you're getting into a stock because you like it fundamentally, you know, you're going to dollar cost average into that one because the fundamentals are good. Where you get out is when the report comes in the next time around or something in the environment, the circumstances change, where it changes your thesis on the name, you should be getting out, not dollar cost averaging to just to break even. That's my look there. Keep going here. BlackBerry. Sharif Adera, is there a rule for how far correction goes? The Lee Auto looks like mirroring the price action. I'm not sure what you mean there. With respect to the technical definition of a correction, it is 10%. Okay, so when it's 10% off the highs. So we know from the July high that we made on the indexes, we corrected, right? It was 10% off July highs, correct? Oh, yeah, we're in a bull market. Yeah, no, hold on. But from the July highs, we were in a technical correction. Correction. It went correction. I'm just making sure with the big kahunas that I have this right. So my understanding is 10% off the highs is a correction. That's, you know, the technical rule of it, but we're not really talking about that at the moment. Go ahead, Adair.
There's an interesting question here from Sally Wong. It's direct, I guess it's directed at you, but it's an interesting one. What practices do you recommend for better charting? I guess. Practice. That's a good point. Yeah.
You need a lot of screen time. Like I'm being serious, and I don't say that, you know, just lightly. You really need to stare at charts a lot. Unless you're gifted, trading successfully is going to take you a while. And I'm not saying you're not gifted, obviously, but to me, you know, it's one thing to see the charts in a book, and the great outline that they're able to show, and it's a completely different thing to be able to see them, especially intraday trading when things are moving quick. When you're charting at home at 10 at night and doing it on the daily and things are closed, it's a lot different, But when you're charting intraday, to pick up on patterns, it's just going to be practice, practice, and more practice. That's all I can say to you about that.
Yeah, I think it's interesting too, because I think you honestly, in some ways, learn more from interact, at least again, in my very limited experience. I would like to preface this, and again, trading in sim, I find like I'm learning a lot, just kind of seeing that sometimes patterns don't go the way you think you are, right? Like whatever technical, I guess, wherewithal you think you possess, or whatever you think the markets are doing. Like we kept saying last week too, the markets don't care about your feelings. They don't care about the technicals. In this case with Eli Lilly, I thought we were seeing kind of this higher high. So I got in thereabouts this level, because where we're pushing off at. I was like, maybe we'll get in here. We kind of dipped right now. I'm trying to get rid of part of my position because we're kind of getting close to that area that I wanted to get out. So basically, like, even though I thought this was going to go a certain way just based on what we thought was technical. And maybe sometimes too, it's like you don't blame the market. Sometimes it's kind of what the charts are doing too, right? Or what were you entering at a weird place? Like I probably could have entered this lower. I should have waited to see what we did at VWAP, because it does look like VWAP is a level of contention for Eli Lilly today. We bounced off it here, we bounced back down. Like it's definitely interacting with VWAP. So I think part of it too is just looking back at charts too is interesting. Like while you're trading them, I think it's interesting too to see how, if they will react the way you think they will. But I think especially for myself, and again, I am trading in sim, so it's a bit different. I think just interacting when you think you see a pattern is important, because it can show you how things do react in real time. Keep you on your toes.
Okay, I Don't Face has a great question as well. Sharif, in what time frame does it work better to mark the parameters to better see the levels? I'm going to go ahead and say that there is not one particular level. I mean, everybody has their own way that they like to chart. Some people will chart on a wider time frame and use a narrower time frame to actually figure out their entries. A swing trader like Michael Moss will use the daily and maybe the 4 hour or the hour, because that's the time frame in which he works. He holds things overnight. He holds it for a few weeks, this, that, and the other. If you're trading a small cap gapper that's moving, very aggressively on a per second basis, you're going to want to be on the 1 minute, maybe have a bigger view as well, the 1, the 5, and then the daily to figure out where the larger resistance levels are. I don't think that there's a hard and fast rule with respect to what you should be charting on, so long as it's consistent. And that's the thing. You want to make sure that what you're doing is repeated every day, so that you can have the data to figure out, is this system working or not? If you're changing it day in, day out, your data is not consistent, and you're not able to make that distinction as to whether this worked, no, this didn't. I'm not saying you can't change. Absolutely you can change, but you have to have some consistency in order to to figure out that there is a need for change. Because if you're constantly changing, you don't have the accurate data.
It's a good point.
Yeah, so that's my look on that. What makes someone gifted, says Nando's R. I don't know, God? Like, I don't know. That's just, you're good or you're not, right? I mean, you'll probably figure that out quite soon. If you're in this for 6 months and then you've got a hit rate of 75%, yeah, you might have an inkling that you're a little bit gifted, but yeah, who knows? Adam, shout out Big Adam. Adam, by the way, his team won 3-1 on the weekend, and my man scored the second goal there. Adam, what position are you playing, by the way? Are you a striker, or are you attacking mid? Whatever, let me know, Adam. Do you adjust your risk allocation size dependent on the time of the day and the setup? Absolutely. For example, I don't risk as much during the lunch hour period when you guys are on. I don't blame you. There's much less volatility. To me, this presents a better trading opportunity. I kind of don't like volatility. The Katina man absolutely thrives on that opening print. He likes that 9:30 chaos. You know what I mean? And he trades it well, right? He knows how to get those dip prints, and he DCAs at the right time. That's his. Daniil loves that as well. He's also on that. He has his levels pre-programmed from the pre-market. He's here before anybody is here. He's getting all those lines ready. He knows exactly how to. For me, I'd rather a slower more stable time of the day, and you know, where I can digest the price action a bit more calmly, and then figure out how I'm going to bamboozle a couple of bucks out of the market on the day. So I think you're absolutely right. Your observation is just really, what do you want, right? Going down here, Dara, sorry, just get a couple of more questions here. DK, do you know the strategy for using imbalances for open prices? And do you know how the open price is calculated? That is something I'll leave for the big kahunas, or I can get back to you on that. I know it's basically an auction, right, at the time, and then just try to pair orders up, and then whatever the imbalance on the order is displayed. And so you can kind of have an indication about what a stock is going to do on the opening print. It's not hard and fast, because that presupposes that everybody who wants to put their order in has put their order in, and that nobody's going to put them in at the bell, because you're not going to have any notice of those because they haven't been put in yet. So that would be what I would say to you on that. Bob Dub, I checked a bunch of tickers and can't find a good example of a fake out today, but I'll keep an eye out. Shout out to you, Bob. We'll definitely go ahead.
Yeah. Oh, okay. Yeah, I mean, I think part of, too, like, just learning, trying strategies, kind of admitting when things don't work out. I can talk about this Eli Lilly trade, because this was rough with a capital R, and maybe the whole word was capitalized with a couple exclamation points. Bolded, underlined, bad trade, but I want to talk about it because I think that's what we're here to do. So basically, like I was saying, too, I was identifying what I thought was a pattern here, where I was seeing higher high. We had higher lows here. I happened to get in way too early. We're still seeing this kind of movement now that we've kind of seen this. And yes, I did realize I got out basically right at the bottom of this one here. But I think I decided, you know what, I'd rather just kind of get out, cut whatever losses I thought I had. And, you know, you can always get back in a trade too, right? I think it's important to understand, you know, like, know when to hold them, know when to fold them. I wanted to see what we did below VWAP. That was kind of what I was doing with this when I had calculated my risk and reward, just to flash back to last week's lesson, because we learn from our mistakes, and we also learn from last week's lessons as well, you know, combining everything together. Another thing with the Eli Lilly trade was probably volume, not really as high as it should have been, right? So kind of reflecting on what we did here, even though, like, you know, the pattern did look like it worked out. It looks like it still might be working out. I just might have been a little bit overzealous and gotten in a little bit too early. So even if, like, some people are saying here too in the chat that, you know, patterns aren't necessarily everything, they are not perfect. Also, you know, thank you to Neil. I like this comment here. This is a nitpick, but there is a big difference between a losing trade and a bad trade. If you followed your risk plan, you didn't make a bad trade. Thank you. I appreciate that. And I mean, I did follow the plan. Like, I didn't, you know what I mean? I wanted to basically see what we did at 599. That's basically where I got out. I don't really use, like, the risk to reward ratio. Maybe I should. Maybe that would help me plan better. But basically, I wanted to kind of get out minimum at this 6045. So it was going to be a decent win had it gone the way I thought it did. Now it looks like we actually could be doing the pattern I thought I saw. I just gotten a bit too early. Yeah, we could be having that swoop to the upside. But yeah, thank you very much for that comment, Neil. I appreciate the perspective on that.
Here's something for Neil. They'll come to the screen over here. Oh. You know that December 17th, the Cowboys are going to play.
He's been planning this all morning.
The Cowboys are going to play Buffalo. In Buffalo. And I'm just going to go ahead and put my neck out there. This is going to be the final score on the 17th, just like it was the final score in the 93 Super Bowl. 52-17, the Cowboys ate all of the Buffalo's lunch that day. I mean, even ate their appetizers and probably took their drinks as well.
The appetizers, right?
Too. I had to do that. You know I had to do that. No, you didn't, he says. But shout out to the deal for being an excellent sport, by the way, baby.
Wait, so I have a question. So are these teams, like, actually, like, legitimate enemies, or is it just like a beef?
No, no.
Okay.
Because
I know there are rivalries between certain teams. That's why I asked.
Okay, so good point, because one is in the NFC and one is in the AFC. So technically, typically they don't have rivalries, but in this case, because there is that 2 Super Bowl, you know, yeah, so there is something, you know, similar. But I wouldn't say that, you know, they're like, they hate them as much as the Jets or as much as, you know, New England. Definitely New England, because Tom Brady, you know, just killed Buffalo for years and years and years. All right, guys, let's keep going.
Yes, there's something I was thinking of, yeah.
Neil, wow, bring Sally up challenge. Loser has to do it. I couldn't agree more, man. Me and Neil were already agreed. The loser of that game has to do the bring Sally up, bring Sally down challenge. I think we will probably do squats rather than push-ups. I don't know if I can do it either with push-ups, yeah. Well, Neil says he will try with push-ups.
Oh.
There he is, there he is.
He's on the mic.
Was to be able to do the Bring Sally Up push-up challenge, and I never was able to do it. I didn't really commit to it, but I will fall on my face trying if the Bills lose. I don't care. If you want to agree to do that one,
I don't mind that.
I mean, the Bills can win anyway, so it doesn't really matter to me what we do. I just figured the squat one, like I've done it a million times, and I can get through that without pain. If you want to see somebody in pain, doing the push-ups is much more painful.
Yeah, I have to agree with that.
It's ridiculous. David Goggins did. I saw David Goggins do it, and he was like, wow, that was ridiculously hard.
And how long is the song? Like 3-4 minutes?
It's like
Something
three or 4 minutes
It's not
long.
short, yeah.
Hey, you guys can check it out. It's really, it'll be all in good fun that day. But yeah, go back to your fantastic lessons and keep the Bills out your mouth for at least another 30 minutes, bro.
Keep my bills out your mouth. All right, guys. We always have fun around here. And Neil and I always try to compete there for the Bills and Cowboys.
So much.
But yeah, the Bills had a fantastic game yesterday, I got to tell you the truth. And so did the Cowboys, though, making easy work of not very good teams, to be honest. Yeah, well. All right. Going down the list here. Any other questions? Go Cowboys, says Jameson. Yes, absolutely, Jameson. You are on my good list now. Going down here, anything specific to what we were talking about, guys, before we circle back and talk about patterns that we're talking about? We're talking about 3. Talking about the ascending wedge, AKA flat top break, or ascending triangle. They're synonyms. Descending wedge, or descending triangle, AKA flat bottom break. We don't have a flat top break animation, otherwise I would have hit it. And then third and finally, the essentially equilateral, not equilateral, what is it called?
Symmetrical?
Symmetrical triangle, which is basically higher lows and lower highs, compressing. We call that the compression pattern. I'm sure you've heard me say that multiple times. We're going to circle back around to those bad boys. Paul wants to know if Dish is going to be the next AMC. Paul, I've heard a lot made about Dish. I know that they have a high, Dara doesn't like it.
Well, there's just so much heard about it, and it doesn't look that impressive.
I got to tell you the truth. I mean, I used to have Dish Network back in the day when, you know, satellites were a thing. And, you know, now it's really IPTV. Did I have Sky? The Chilean Nightmare asks, and I didn't. I had DirecTV, and then after they made it hard to, you know, infiltrate their system, I got Dish Network, and that was like 20 years ago. There's a statute of limitations on that.
Isn't Sky the British one?
Yeah.
Like that with that, like Stalker Saturdays or whatever?
Yeah, Sky. Well, we had it. There was in England when I lived in England. This was like 08 or 07 to 10. There was Virgin, and then there was Sky. Adam, correct me on this if I'm wrong, but I'm pretty sure NBT, British Telecom, which I think got bought out, by the way.
Oh, interesting.
Yeah, yeah. All right, let's go on here. I'm trying to look for tags. What is a term of cup and handle referring to? Sally Huang asked. We're going to get to cup and handle.
Oh, yeah, I have lots of notes on that one. Don't worry, guys.
So we're doing only 3 chart patterns today that we're going to talk about just so that we don't throw too much. And then the entire week, the rest of the week, I know Thursday's a day off.
It'll be raining chart patterns.
There you go, baby. We're going to be dropping cash like this. We're going to be raining chart patterns rather than raining money there. But yeah, we will be doing the cup and handle. We'll be doing the head and shoulders. We'll be doing quite a bit, Sally, so hang tight there. We'll get to it. MJP, thoughts on the golden cross pattern? Looks like one on Tesla. Now, the golden cross is, I don't know if you've heard of this before.
I had to look it up and do a lot of research because I'm not going to lie, when I first heard it, I legitimately thought that it was like a cross shape. And then I realized, I'm not going to lie, but then I realized it's a cross over a certain moving average when one crosses over the other. So that is my very layman's term, I guess my experience there, because I'm still very new. And I need to still work on using moving averages. That's something I'm excited to work with, using more technical indicators this week as we delve into the wonderful world of charts. But yeah, so I think, yeah, like the whole golden cross and death cross, which is basically they're inverse of each other. And they really depend on what time frame you're going to use. Yep. That is my quick
And they're not chart patterns.
Sorry, they're not chart patterns.
No,
Yeah,
because they use indicators. They use the moving averages.
Okay, there we go.
Right?
So they're patterns. They're
Well, they're not patterns. They're just, it's an indicator. So you're looking for the 50 period to cross the 200 period from the other. Now, you have to understand, we haven't talked about moving averages, but I'm going to give you a little tidbit right now. Moving averages can absolutely be brutal during periods or markets of consolidation. Moving averages work very well when you're trending, whether to the upside or the downside. You have to be able to determine, are we in a trending market or are we in a consolidative market? If you're in a consolidative market, stay away from moving averages, whether the exponential or the simple. Okay? You need to be able to decide whether are we in a trending market or in a consolidating market. It doesn't matter what kind of trending market, whether up or down, but you have to be in a trending. That killed me, bro. That killed me, bro.
I was not prepared for that.
No, neither was I.
Fun.
He took like a page out of Randy's book.
Yeah, it was like a fun cameo. Yeah. Well, Neil does that sometimes too. He'll just stand behind us. Like, I feel like it's like this is the place to be, I guess, during the midday.
Yeah, so that is, people love that. Gangsta, says John about that. Katina, man, you've been called a gangsta. Sharif's hair is thinning from TRT. I don't think my hair is thinning at all, man. My hair is damn thick.
I like that, like the camera, the hair to the camera.
Where is it thinning? What are you talking about?
Point out the specific place.
We're having a good time today. We're having a good time. All right, guys. Yeah. What's the difference between simple and exponential? I'll tell you very quickly, guys. Exponential more heavily weights the recent price action versus the more historical price action. To me, exponential is better for day trading and simple is better for investing. It doesn't matter what we've done lately on the investing side because you're looking much more long-term picture, but for exponential, when we're trading intraday, it makes a big difference to me anyway, what we're doing in the recent as opposed to the more historical. So that's what I would say. You should be looking there. So,
yeah, what I heard too from my like kind of, I'm still trying to do more research on the moving averages, but basically my understanding too is that certain time frames are different for different ones, right? So kind of like what you said, right? So with the exponential, the shorter term is going to be a bit different. I also know if you're doing from what I read anyway, if you're looking for golden cross or death cross, I guess the time frames of like if you're doing the 200 MA, the 50, like it really, the larger time frames are usually seen as more heavily weighted. So that's my my little baby research on that. Also, Mr. Longshort's mentioning PLTR, a sitting triangle trying to break out. What time frame? I'm curious as to what time frame, because on the 5-minute, it's a little shaky. I want to see the 10-minute here. Yeah, because I think honestly, the top is not super flat to me personally on the 10-minute. I'll check the 3-minute too, because I'm trying to see it. Yeah, no, honestly, for myself, I cannot quite see the ascending wedge or the flat top break, if you will, on our friend Palantir in this 5-minute. But yeah, I mean, we're definitely high on the day, and I do think, we could break out. We have sort of a range here, but yeah, I think it could be a flat top break necessarily without the wedge, because I am not 2-minute and 5-minute. Okay, let's check. I don't have a 2-minute here. Check the 1-minute. Let me zoom out. Yeah, I mean, I think we definitely, yeah, okay, you're right. I think on the 1-minute it's a bit clearer. We do have some flat top going on a little bit at 21.36. Yeah, I think that definitely, I would agree, Mr. Longshorts, that 21.36 does seem to be kind of a level. Yeah, some people saying it does look like that ascending wedge. Yeah, it does seem to be a bit of a level here of resistance with regards to when we're looking at chart patterns. And yeah, I think that goes back to time frames being different, because honestly, I struggled a little bit seeing it, the 5 and the 10, but the 1-minute, I do really see this flat top, right? So I think yeah, like you have to look at different time frames, but don't try to force patterns either, right? Like if you don't see it, don't hop in. That being said, yeah, like even if I don't necessarily see the ascending wedge, because the bottom here, since we hit that level, looks pretty kind of flat to me, I do see a flat top here to some extent. Yeah, there we go.
Absolutely. Okay, quickly now, before we just circle back, let's have a look at the future. I've been involved in this trade at 11s for a while. We've been dipping back into 16,000. Most of the dips, I mean, all of them literally so far have been bought up. I'm hoping that this signals a clear area of support at that 16,000 and that we continue to run into a previous area of resistance. Now, you'll recall when we had that CPI print last Tuesday, we had a monster algo print that took us far north of where we are now, and here it is. This is the algo print I'm talking about. We rocketed up to 16,050. So, you know, in theory, we would probably have a resistance level, at least an initial one, around that 50-point level. Not that I wouldn't be cognizant of that 50-point level to begin with. I would be. I am very cognizant of 50 points and 100 points as key levels of resistance and support on the future. Something I just keep my eye on. Not saying we get up to 1650 today. If we hold 16, we could get into a random number and then just hold that level. But what I'm looking for is a 16,000 hold. The dips into 16 have been bought up so far. I think, you know, I'll probably give this a few points below 16,000 before I stop out because, again, it's not really a hard and fast rule that you have to hold that specific level. I mean, look at this. On these ascents over here, we got into 1602 before we quadrumped all the way back into VWAP. So, you know, sometimes you get a perfunctory break of the level only to continue later. So keeping my eye on the future, looking for a 16,000 hold. Otherwise, you know, we're going to cut this bad boy and look for something else. All right. Did anybody have any other questions that you saw before we continue and start back again with ascending triangles?
Yeah, let me see here. I'm not really seeing, I'm not seeing much right here. Yeah, if anyone has any specific questions about kind of what we've been talking about, definitely tag us. Right now, I don't see anything, or if we miss something, you know, let us know for sure.
Yeah, absolutely. All right. What was I laughing at? I was laughing at people making fun of my hair. That's why. I thought it was funny, so I was laughing at it. But whatever. I mean, you just gotta be. You got to be laughing at yourself. Otherwise.
Got to go with the flow.
Telling me about compression, says Coin&a-Half. Absolutely. We'll get to that. We're going to talk about the symmetrical triangle, which is you know, a synonym for compression patterns. Let's start new again, guys. Let's circle back. The Chilean Nightmare has already restarted the position board. Ascending triangles, ascending wedges, or my preferred name for them, flat top breakouts. The Neil loves them. People seem to love these type of patterns. They're typically bullish. Here's what we're looking for, guys. Ascending wedge goes as follows. Where is my, oh, I had it up on the Bills Cowboys score there. That's probably why I couldn't find it. Sorry, Neil.
You're not going to let it go.
So funny. Here it is, guys. Come to the chart, Chilean Nightmare. There we go. So what this doesn't show is the pattern prior to this. But the specifics of the pattern are a trough followed by a low higher on the second trough, and the third trough has to have a low higher than the second trough. So higher low, higher low, higher low, all the while maintaining a you know, general area of resistance, let's say 16, let's say 20, whatever, all of which were bounced off, rejected. Now, the more touches at that level, the more important that level becomes, because it shows you that more people are participating in maintaining that price level, whether people are instituting shorts or you're having people take more profit at that level, whatever it is. The more time spent, the more touches, whatever on the 5, the daily, what have you, at that flat top level, the more relevant and the more valid the pattern becomes, okay? So you're looking for higher low, higher low, higher low, and a flat top area, and then you get a break of that top. Now, we talked about perfunctory, superficial breaks. What I'm going to say to you is you need to have some sort of confirmation indicator. Now, that confirmation indicator can be a 3% rule, for example, where the price action gets away from the resistance level by around 3%. It could be a 3-candle rule, whether it's a 3-day close above that level or a 3 5-minute candle close above that level. Look for confirmation that that level has been taken successfully, as opposed to just being breached, you know, superficially and then retraced back down. So ascending triangle, flat top breakout, ascending wedge, they're all the same thing. They're synonyms. You're looking for higher lows and you're looking for a flat top resistance level. Now, what this price action doesn't show is this is a continuation pattern, meaning that it's more likely to be valid if it was previously followed by an uptrend, because it continues the uptrend. It's a continuation pattern, as opposed to head and shoulders, which we'll talk about in the upcoming days, which is a reversal pattern. It's showing you that the trend is reversing. So typically, head and shoulders is followed, is preceded, pardon me, by an uptrend, and then it indicates that the trend has now reversed. It is a reversal pattern. So that's what I'm looking at there. It is a good look. This example here, Adara. Any questions before we take some questions from the chat?
No, I think I asked kind of my questions, but yeah, I guess too. Normally, I guess it really depends on the pattern too. But is there usually generally like an amount of higher lows that we need before it'll break out, or I guess it really depends on the time frame, on the pattern itself.
The more the better. Yeah.
Okay, and then that with volume can help confirm the strength of a breakout.
Absolutely.
Okay.
Yeah, absolutely. We're getting a nice bump up here on the future. I'm going to take my first beak wetter at 25s. We'll see if we get that move up, but it's been a very nice 16,000 hold so far. Let's not count our chickens before they hatch, but it's been a decent look so far here, Adara, on this 16,000 hold. And, you know, I was hoping we would get and hold above 16,000 today, so we'll see how we do. So that's the first one, ascending wedge. In exactly the opposite way is a descending wedge. Now, descending wedge presupposes it's most accurate when it is preceded by a downtrend. It doesn't mean that is the only time it works. Case in point, Liotto. Let's get to it, right?
That's a really interesting one when you think about the context of it too.
Yeah. And the fact that it was a complete outlier, right? I mean, here's the look. This is Liotto, and I've made it. Somebody complained that they said it just looked like a box, so I put Liotto there. Now, guys, look. This descending wedge, which is over here, lower high, lower high, lower high, 38, flat top, flat bottom, pardon me, right here. But look what it's preceded by. It's preceded by a big boy uptrend from around $12.50 in November 2022, all of which had higher highs, higher lows. So this is kind of like the anomaly to the chart pattern here, where this is why you kind of have to, you know, think of it more of as an art than a science, because it's not always exactly how they say it's going to be. But in any event, the descending wedge, lower high, lower high, lower high, that 38 flat top, flat bottom, defended how many times? 1, 2, 3, 4, 5, 6. And then we come back to it, 7, 8, 9, 10, 11. And on the 12th time, it gapped down and broke. So $38 held so many times. And this is what I was trying to say. The more touches at that flat bottom, at the support level, the more valid it becomes, because it's showing you that buyers are stepping in, sellers are stepping in on volume. Now, the question that Adara asked, which I really like, is the actual breach of the support or resistance line, does it need to be supported by volume? And I would say it's more confirmatory if it does. And on this particular day, you had an outlier in terms of volume. Look at this on Liotto over here. Take my picture off for a second, Fabian.
Oh,
so
yeah,
I can
that's
show.
wild.
Yeah, look at this over here. Now, it's not the biggest volume candle that they have, but it's definitely standing out from the most, right?
Yeah.
So it is the bottom of 38 was actually supported by a good amount of volume on that day. You know, relative to what Liotto does, it's good for amount for Liotto, which doesn't do that much volume to begin with. So this is the descending wedge, guys. The only issue I have with this as a prototypical descending wedge is it was preceded by an uptrend rather than a downtrend. Look at the futures pumping, baby. There we go. Now we're getting moving here into the 30s. The NQ pumping. Could we see that 1650 print that we saw last Tuesday, but on a closing basis, baby? We didn't get it on a closing basis. We got an algo print on the CPI bump up there, but now we're getting a nice steady state move up, definitely on the future, being supported by a lot of these big caps. I'm talking about Apple, I'm talking about Nvidia, I'm talking about Amazon, and even to some extent Softy now coming back in. Softy's almost up 2%, 1.9 and change, knocking on the door of that 377 level. Good break up here on the future, Adara. Now quickly, let's look at pass overdose. Oh my God. Flat top break on Apple. This isn't what I would call flat top break. All right. And that's because we only have one trough over here, my friend. We want multiple troughs to show it. But he's not wrong. I mean, I see where you're going with this.
Yeah, like the general formation.
Yeah. Look, it's just, you're still long? The Katina Man is still long, by the way, for anybody following along with Sean's trades. The Katina Man is still long. He's long 191.03 on AAPL, so about 50 pennies in the money there as it does its little dance in front of that 191.5. But yeah, I see what you're saying. I wouldn't consider this a flat top breakup. This is not really what I'm trying to describe here, by the way. Moving down, Elon. Adara, please stay at the ascending wedge topic. The market follows so far. Once the topic of descending wedge begins, the market may fall. Wow, are you superstitious? Jeez.
Also, the NQ picked up, so I don't even really, I think it might have, maybe earlier, but now it seems like it has proven the opposite.
Yeah, you wanna look at the descending triangle for a little bit?
Yeah, let's look at the descending triangle for in a momento. Yeah, so basically the descending triangle, which is not really what we have here. So let me find an example for the day. I mean, I'll just show this like little example we have over here again. Basically, obviously this is just kind of like a drawing, but yeah, so basically with the descending triangle, you do have a flat bottom, much like, you know, what we mentioned with Liotto, lower high, high, flat bottom, and then at a certain point, this is only like two, but like as we were mentioning too earlier, and I think why that Apple flat top break was, even though it was accurate, maybe not like the most apt example, is because too, what we were kind of saying too is usually if you have more confirmation, along with strong volume, you can kind of prove the strength of that move, right? So if you only have like, you know, in that case, one trough, it's not necessarily going to be the strongest indicator of any movement, right? So usually if you have a combination of volume and, you know, more, I guess in that case with the flat bottom, you have more of those lower highs, that stepping stone down to the downside with that solid flat bottom, then that might be more indicative of a break at that point. So that would be, I think, kind of interesting. Also, there is, Jay Lee here in the chat too, just thought you should mention patterns, in quotes, don't dictate future. Important to state, this is my honest opinion, since even when you have a cup and handle or a triangle, it might not go.
I don't trade futures using patterns.
Oh, I think it's just more like in the future, is I think, I can't tell if he's talking about the futures or they don't dictate the future. Like, I can't tell if it's like
they're
the futures,
indicative
like
of the future. There's nothing that's hard and fast.
Yeah, I think that,
yeah.
And we were mentioning that earlier too, right? When I had that Eli Lilly trade where I thought that we did, I'll pull it up again because we learned from our mistakes over here at the How to Trade in the midday. Yeah, so basically I got in seeing, because I thought we had, this isn't, you know, really a triangle, but same kind of idea with patterns not being absolute, not being finite, and you definitely have to adapt. We had a higher high, here we go. We had higher lows for a while. I got in where I thought was a solid point of entry, and then it ended up not being accurate, so I kind of had to leave, right? I think the important part too is just because we're learning about patterns too doesn't mean you have to necessarily marry yourself to a pattern. If it's not working out, then like we said with risk management too, right? Be willing to adapt, be ready, be nimble on your toes, and I think that's why with last week being risk management as well, and why I think it was cool that was our first week, is because it kind of comes into everything. Like if, you know, with everything we're going to talk about too, it's always important to be aware of your risk because the patterns won't always necessarily come to fruition, and you have to be prepared to react to that, I guess. Yeah.
Okay, excellent. There was a good question here, I just missed it. Oh, BlackBerry. Sharif, Adara, what is the relationship between movements in these triangles and the volume? What if you have a lower volume in an ascending triangle? So what you're looking for in the ascending triangle is you're looking when the flat top is breached. So let's just say the $20 level on a particular stock was a very clear flat top that wasn't able to be breached, okay? And then finally, you get a breach of that level on a closing basis. We're not looking for a quick perfunctory wick intraday. I'm talking about the daily chart here clearly. You're looking for that closing print. You want that closing print ideally. It's not going to happen in all cases, but you want that break of the flat top to be supported by above average volume. You don't want it to be a run-of-the-mill type volume day. Now, you're obviously going to have to compare that volume day to previous days, okay? That's how you know it's an outlying volume day. And so what you want to see is a break through that level supported by above average volume. And that's what I'm trying to say there, okay? It doesn't mean that there has to be an abnormal amount of volume on every trough, for example, on the ascending wedge. No, that's not what I'm trying to say. I'm trying to say when there is a break of the level to the north side in an ascending triangle or a break of the flat bottom on a descending triangle, that it's done so with a good amount of volume outlying from previous days. And so you're going to have to do a comparator to the previous day's actions to see whether, what is this outlying volume. Now you can use RVol, you can just visually do it. RVol is relative volume, sorry, for those who are still learning. And if you want to have an understanding of what relative volume is, do a quick Google search. We're going to get to that in a future version of Learn How to Trade.
Yes.
But that's what I meant by that, guys. All right, moving down, looking for more questions here. Shout out Jay Lee. Yeah, patterns I rarely use, whether it's stocks or futures. Sure, they help you find a good setup, but the key is always a tight stop limit downside. It's going to get you always. Everything that we're saying today doesn't negate all the stuff that we said last week about risk management. Just because you see an ascending triangle or a descending triangle doesn't mean you get in, punch in 100%, start DCing without stop loss, no stop loss, gang. No, that's not what we're saying at all. Not what
No
we're saying.
stop loss, gang.
Well, there's this meme on the internet.
Oh, is it a meme?
Yeah,
I just thought it was
is.
a funny
It's called
phrase.
No SL Gang.
I need to look this
All
up
right,
after
bro.
today.
Have at it. Coin and a half asking what period are we talking about? These patterns are fractal, meaning that they are applicable on different time frames. So just because I'm looking at something on the daily chart, like I'm discerning or identifying an ascending wedge on the daily or a descending wedge on the daily like I did with Liotto, doesn't mean that it's not applicable intraday, on the hourly, on the 4 hour. No, they are fractal. Chart patterns are fractal, meaning that they are applicable on other time frames. Now, where it gets a little bit less clear is how you weasel your way into these trades. And I say weasel jokingly, of course.
Sneak in, yeah.
Some people, they like to chart the bigger patterns on a wider time frame, say the half an hour, the hourly, the 4 hourly, but then they want to be able to pinpoint their entry using a shorter time frame, the 5, the 3, the 1, the 10, whatever it is. But my suggestion to you is whatever you use, repeat it over and over and over. That way when you come to look back at your trades and you try to extract the data, you have a standardized data set, not some willy-nilly, today I use the 3, yesterday or tomorrow I use the 5. Your data won't be accurate if you do that, and you'll have trouble actually figuring out what you do. DK, what's your stop on the break on the NQ? Is a decisive break of 16,000. I'm going to give it a couple of points below. That's going to be my look there. Elon, 100% agreed. Whatever pattern it is, risk management is necessary in case it goes the other way. Absolutely agree. Everything we talked about last week and everything we talk about today has to be viewed with the lens of what we taught you, from the lens of what we taught you last week. You have to take good risk management practices into account when doing any of this stuff, Adair.
And I think it'll be cool too to see, as we do each week, we can kind of build on what we're learning, right? So we learned, last week about risk management. I think that's going to be very vital as we continue into all of these other lessons. And again, I think when we're learning about these chart patterns too, it'll be interesting to kind of see how they also interact with other indicators. Do you know what I mean? Like how they're going to kind of intersect with VWAP or what have you. Also, I should address the trade that I'm currently in because I have not as of yet, just because I have been so caught up in like all these cool chart pattern things. Basically, I got short Tesla. Now, I'd like to explain this short. I got him when we were down on the day. Tesla is like a skosh weak as well on the day, and by that I mean we're slightly negative. We did have that very rough catalyst this morning with regards to the Jefferies price target cut from 250 to 210, and they maintained a hold. So not a great outlook here. But yeah, basically, I decided I usually like to give myself like $1 if it's a stock like Tesla where you kind of do have to give yourself a little bit more wiggle room, for lack of a better term. So I was like, I'm going to get out at that 234.80, but we could not decisively break it. The more I saw us stuttering around that 234.60, the more I was like, we're going to hold out. Because I've mentioned this quite a lot, and I think it's been kind of evident too, especially with my earlier appearances on the midday show, where I have this issue where I tend to want to bow out of a trade the second it goes slightly awry. And so I was really fighting that instinct because I think part of it, and what I loved about being able to do the risk management last week too, was basically just learning, like, as long as you have a risk plan for yourself, you're set. You just kind of have to adhere to that plan. And that also goes back to what Neil was saying in the chat earlier as well, which I really appreciated. There is a difference between a losing trade and a bad trade. And as long as you like adhere to whatever plan you had, you have managed your risks. You know, a trade isn't necessarily quote unquote bad. You know, and I think I'm trying to remind myself of that as well. Just because like, we talked a lot about last week with managing the mental, and I think that's part of like trading in general, not just with risk management, right? So I think even if you do see what you think is a pattern, you know what I mean? You still have to hold on. Don't take the hopium, as we mentioned last week too, right? Just wait, see how things materialize, be patient. And I mean, in both in terms of entry and in terms of when you're in a trade yourself, if it's not breaking my risk parameters, I'm going to stay in for the time being. So I would like to address this this kind of trade. Yeah, Jaylee, I think you'll get some from the Tesla short, but it's choppy. Good luck. Thank you. I appreciate that. Yeah, like I said, too, I'm very scalpy anyway, so if we can get 50 cents, what have you, I will be pleased as punch, happy as a clam. And as we're kind of getting towards my point of entry, I am definitely pleased as punch. Also, this is an interesting one, too. I think this is something we more kind of talked about last week too, but it's definitely an interesting one from Sally. Love the topics you two were discussing, coming from a newer trader. As someone who's a newer trader as well, really happy to help. I'm learning along here too. How do you practice your discipline on entering and exiting positions? Yeah, I think part of it too, and I mean at least for myself, right? With risk management, we talked about that as well, right? Basically, whatever parameter you're going to use to exit a position. So if you're going to use like higher highs or higher lows to enter, that's also, you know, usually a good place to kind of plan your stop loss as well, right? I think that's at least for me kind of the case. And I know Sharif also will use like the higher highs, higher lows. I've kind of picked up on that as well myself, but I'll use kind of different indicators. Like for myself, for Tesla, I entered kind of using VWAP. So I'll be more emboldened to stay in this trade if I see a break of VWAP. I definitely, for myself, though, I'm working on discipline and staying in positions that aren't going the best, kind of like I talked about, right? So I'm trying to work on, as long as we still have that confirmation, as long as we haven't broken my risk parameters, just staying in, holding on there like that cat hanging onto the tree in that old poster. There we go.
Guys, we're going to talk quickly about some of the side movers today. You know, I haven't shown the side charts in a while, but the Chilean Nightmare was letting me know about Go EV. Go EV is an absolute rocket right now. Canoe, baby. Having itself a day about 15.5%. Good name there, but it's a 30 penny name, by the way, but definitely off the close there of 30 pennies on Friday. Good look, gapping up, strong name. I don't see a headline on it on the day, so. But keep your eye on that one. The other one, you saw the Katina man involved in this one earlier. Boeing is an absolute rocket on the day. Where the hell did this close on Friday? How come I'm not seeing a closing print? Whatever. Who cares? This one definitely getting the support from getting that buoy from the Dubai Air Show that took place last week, outdueling its main competitor Airbus for more orders. It's been a good look for Boeing. We'll see how they're able to do. We'll see how Spirit Aerosystems is able to keep up with all the orders that they're getting. They got 200 some odd orders, most of them wide body airplanes. So we'll have to see how that does on the day. But Boeing looking awfully good today. The other small cap gapper du jour, 73% for my friend here, CDIO, closing out Friday, just sub that $1 at 98 pennies. And now it has a high of 188. Look at that VWAP retracement back right at those key resistance levels, looking to make its way back up. It's at $1.75 at the moment. I was watching MRA as well. That's since given up the ghost after making a 640 move. Now it's down sub 5. And you know how I feel about these small cap gappers south of VWAP, Adara.
Nope, you do not like them.
No,
you are not a fan.
I am not. BKKT also having a day. It's a multi-day runner. This was running last week as well, 18.5%, or 18%, sorry. It's at $1.50 right now, south of VWAP. I kept my eye on that one. ARM as well. You saw, I think Neil was involved in ARM earlier. This one getting an upgrade, as well as SoftBank also had an upgrade.
From Moody's.
Moody's, thank you for that. I just wasn't sure who was. We've been seeing ARM doing really well lately as some of these bigger names look to use their technology to make mobile chips, in-house chips. We know Apple's doing that. Now looks as if like some of the other big tech names are going to start doing that as well. So those are some of the names I was looking at. Adara, BKKT, MIRA, CDIO, BA, GoEV, and ARM. And then over here on the right and left, we have the ES and the NQ. Kyle was asking me, am I talking about the ES or the NQ? I like the 50 and the 100 point levels as support and resistance on both, the ES and the NQ. I use them for both. So that's just my answer to you there, Big Kyle. Shout out to him. Katina Man says, Kyle. Rob EV, are you going to cover the MNQ long before today's 20-year bond in case it turns out? Thank you for reminding me about that. Again, guys, we have a 20-year bond auction at 1 o'clock. If you remember a couple of weeks ago, we had a 30-year bond auction, which absolutely sent the market plummeting. Not saying that's going to happen this time around, but you need to be cognizant of this kind of stuff if you are going to trade big caps in the futures, because they are influenced by the bond market, obviously. So keeping an eye on that, Adara. Now, we talked about the ascending. Let's go to the descending here, which I used Li Auto for. This is the prototypical descending wedge.
Example.
The only thing I don't like about this, guys, is it's a continuation pattern, meaning this was an outlying event over here, meaning that usually a descending wedge is followed by a prolonged downtrend, because a continuation trend means that you have a downtrend, then you have a clear level of support. In this case, it was $38 right here, and then you have an eventual break of that level. In this case, it was a bit of an outlier because we had a big uptrend here preceding the descending wedge and flat bottom break. But nonetheless, the example helps illustrate visually what a descending wedge is. Lower high, lower high, lower high, all the while keeping that 38 flat bottom, and then you get...
I love this as an animation.
That flat bottom break, and you got a good flat bottom break here. If you were loading up at that 39 and 40, it moved 31 bucks. So you could have had a $10 winner here for a quick swing before it started curling back up. Now we had a 42.04 high on Li Auto, and it's been running for a few days now. So that's the look there. Yeah, the future's definitely coming back into 16,000, but you know, I don't really care. I'm gonna be a little patient with it. That's the look there. You want to cover symmetrical triangles?
Yeah, let's look at symmetrical triangles. So symmetrical triangles, that was barely English, but we tried. Symmetrical triangles are when you have a top. I'm just going to show this little diagram again. It's when you have a top that is kind of, you have like a V here in the middle. I don't know, I'm doing this with my hands because it's just on the screen here. So that we have higher lows and lower highs, until basically, and this symmetrical triangle can go either way. It can really depend. So it can either break to the downside below that point, I guess off of the lows, or it can go break above the higher point. Unlike the descending triangle or the ascending triangle, where usually the ascending, for the most part, as you can see in this diagram here, will break up. Descending triangle will often swoop down, with the exception of that I guess in a bear market. So descending triangle is usually within a bear situation. Ascending triangle usually within a bull movement. There are exceptions with everything, like, I'll just close this triangle, like Li Auto, where we did have a descending triangle when we were near highs, right? So I think that, interesting, worth noting. With the symmetrical triangle as well, yeah, it's a little bit different because unlike the ascending or descending triangles, it's really about how it kind of resolves itself. Also, to answer pitch bowl in the chat, I did take some profit on Tesla. As you can see here, we took a 50-cent winner. We have still half our position in. I think it's set to go. If we break 233, I believe we might be running with our money, dining and dashing, and having a party. Analogies, I will always try to make them, even if they don't work perfectly. But yeah, so and I mean, also, these triangles aren't going to work perfectly either, right? We know I love my segues. But yeah, it's a good kind of, it's a good indicator to look at, right? Kind of a pattern to see, to reflect on and see if you notice some movement there. And like we were saying earlier too, they're definitely, hindsight is 20/20, especially with the triangles where you can kind of tell a little bit more afterwards. But it's kind of an interesting challenge to see if you can identify them in the market live, right? So like we said, if people are seeing, steady patterns in that direction, we would like to see them. I know Rivian earlier, there was lots of mentions. I want to reflect on the Rivian triangular situation as of right now. Yeah, we did. It was kind of, we had that symmetrical triangle earlier, right? And then we kind of broke to the upside here. So this was a pretty good example of, and like I think you were mentioning earlier too, it's usually kind of easier to read the symmetrical triangles. Depending on what market we're in, right? So because we were bullish right now, the Rivian symmetrical triangle was more likely to break to the upside. If we're moving to the downside, the symmetrical triangle might break down, right? So it seems to be very reactive to the market in which it is hanging out.
And guys, I should also point out that there are tools to help you out there to pick up on chart patterns. So if you're looking, if you say to yourself, look, it's a bull market. I've assessed that we're in a bull market, and I want to take long patterns only, okay? So you start looking for, I want flat top breakouts. That's what I'm looking for from now on. That's what I want to trade on the day. There are actually software programs out there that help you identify the actual chart pattern. It will kind of try to read it and then present it to you as a possible option, and then you go through it. I like this, I don't like this. Trade Ideas has it, I know my brokerage has it. Go out, look for it if you're looking to do that kind of trade. Otherwise, if you're like me, where you come in on the day and you're looking for what's moving, and then you just happen to see a pattern that kind of, supports your thesis. That's basically how I do it. I don't search out these patterns. That's not really the way I trade. I'm more of a momentum trader that looks for things to support the move, and that's what I'm looking for there. So hope that helps. Mark Susi says TradingView has them built in as well. I haven't used TradingView in so long, so I really don't know what they've got. Adam's got an algo that does it. Shout out to Adam for that. So yeah, there's any number of supports or aids that can help you kind of identify these patterns and, help you, look through them rather than going like what Michael Moss does, which is to spend umpteen amount of hours at night trying to look through different charts. And, he has scanners, obviously, that narrow things down, but he does a lot of charting. And that's what you need to do if you're a technical analyst. Alan, is Intel showing an ascending triangle in the 15? Let's have a look. Let's go pull up the side chart over here. We're going to bring it in. Let's go INTC, and we're going to switch to the 15 in just one sec. So Intel, first of all, this is what you call a beautiful ascending wedge. And look at that breakout. Look at the day it broke out of that the thing, the uptrend line. Neil, look at this. So
this is gorgeous.
Is the day that it broke out. And this had been an obvious ascending triangle, ascending channel, very clear with just a few breaks here and there, but for the most part it was held. And then on the day that you actually got a decisive break and close, you had an outlying amount of volume. You did about 75 million shares. It's not the most on this chart by any means, okay? But it's definitely outlying. This day right here, right? Like, I mean, look, the average, the mean is about half of that. About maybe, I don't want to say half of that, but maybe a quarter percent less, like, or 25% less, around 50 million or so. That would have been the average. Maybe even a little bit less. The average, I would say, around 30 million. So this is what I mean by outlying volume to confirm the break. All right? So that's that. Let's now go to the 15-minute channel, 15-minute time frame, pardon me, and look to see if this is an ascending triangle. Well, look, you only have one trough, right? We're looking for multiple troughs. Higher lows, higher lows. I only see one here. Neil says pump it. He likes the stock. He says pump it. So I'm giving you what he's saying. But in general, what I'm looking for an ascending triangle is more. I need more descents, more drops, but higher lows. So in this case, we kind of dipped in around that 44.10. You want to say maybe 44.15. That was the low if you want to take the closing print or the wick. And then look at this, sideways consolidation. Where's that other dip? Where's that dip in the VWAP at 44.40? If that was the case, then I could draw an ascending support line, right? And then look, you don't really have that defined flat top. You have a flat top over here, but what about this outlier over here, right? I mean, you want to see rejection, like say this was a 45 rejection and multiple rejections off that 45, not just one. And you want multiple dips with higher lows, not just one. So I'm going to say no. I'm going to say no to that. But, you know, keep trying, keep looking. What you're looking for is triangle. Ooh, that's one of the best animations that we have.
I wasn't prepared for that. I just saw the plane flying, and I was like...
So you're in the dollar? What do you have? 6 of those. He's got $6 winners, the Katina man.
It really is a plane crashing with the money.
$6 of the money. Let me guess, Boeing.
I love this. Keep it coming.
$6 in the...
I also love how he jumps out of the plane and he's like completely fine with all the
Right?
money. It's a great animation.
It is. I love that. This is one of my favorite animations because it's like so vivid too. Like
yeah,
the,
and it's so well done. Yeah.
Show him the other airplane one, the crappy airplane one, the one on 5.
Is the one with the AMC?
Compare that one to this one. What is this?
Well, also because Sean's engaged in the other one too. Like he's actually coming out of the plane.
Right?
Like
Yeah.
it's very. It's like watching like a Jason Bourne movie or something. Yeah.
Jason Bourne. I love it.
Or something like that.
All right, guys. Ozan asks, Tesla is a nice symmetrical triangle on the 50-minute, if you ask me. I actually looked at it at the 5, and I kind of have to agree with you, Ozan, there. I was looking at that. And we made note of that earlier on about TSLA. It's okay. It's not the best symmetrical triangle you can see out there, but it definitely is in a compression pattern of sorts because of the lower highs and because of the higher lows. We'll see if this level holds out or not. Now, you have to adjust these as you go, right? I mean, just because you drew in the trend line doesn't mean that they're not subject to repositioning, because as long as this trough over here, the one that's forming over here, remains higher than the one over here, you still have the pattern. The pattern is still intact. It's when this area over here breaks down below this area over here, then you don't have that anymore, right? The ascending wedge or the symmetrical triangle requires a series of higher lows and a series of lower highs. If you don't have that, if you have an outlying event, then it's no longer valid. And that's just my statement about that. Any comments there, Dara?
Yeah, no, I think, I mean, I can comment on Tesla both, yeah, in terms of the triangle, and then also as someone who was in it and then made a quick, hasty exit on stage left. Yeah, I mean, we could have taken more profit here, but I think also, like, part of my risk management strategy, like I said, is trying to maximize my profits. In the words of 21 Savage, taking less L's and making more M's. So basically, and what I mean by that, as much as that's a really weird quote to use and maybe a weird person to be quoting, what I mean by that is I think, like I said earlier in my trading journey, I had this whole tendency to get out before making profits. So basically what I mean by that here is I saw VWAP was an interesting point of contention for Tesla. I decided to get in maybe a little bit too early, but it is what it is. Decided to hold there because we did have some resistance at that 234.60 area. So I decided to hold. It ended up working out. So yeah, we could have been a bit more patient, but I mean, I wanted to take profits where I could. And that's why I decided to go while the going was good. And then I guess we'll get why the getting's good. I don't know. And then get out before we went to the high side, basically, right? Anyways, but yeah, I think there is definitely the symmetrical triangle, and it looks like we might have broken that, or I think we will decidedly break it. Let me see. Let me actually draw this, because I find actually drawing it, that's why I like the chart patterns too, is they're so visual. So here we are. Here is the top. So as we said, you know, lower high, lower high, lower high, lower high. And then, yeah, I mean, it kind of depends. It looks like, I would say, though, we basically look like you've made a break here. It kind of depends on where you want to chart the bottom part for the symmetrical triangle. But I would say on the 5-minute, it does seem to be very much intact for our Tesla short. Also, I have a question with regards to symmetrical triangles that I just realized we're trying to chart this.
Yes.
So I know we were saying, or you were saying when I asked with regards to the ascending and descending, is that there's a bit more support if we have, like, for the descending, if we have, like, you know, these more, you know, failures to break to the upside, or I guess more consistent flat bottoms, and the flat top, same kind of idea, but reverse. How do you measure the strength of a symmetrical triangle when you have, I guess, touches on both sides?
Well, that's the thing, right? And that's exactly what I was just finished saying about Tesla. You have to possibly adjust the trend lines that you're drawing. So, for example, let's look over here, right? So I drew a Tesla bottom trend line here to support the bottom end of the symmetrical triangle. But that doesn't mean that it's going to stay within those parameters, right?
Yeah, that's true.
It could make it a little bit lower. So long as it doesn't break this, I'm going to have to adjust that trend line. That would be considered a touch. So long as the trough that in question that we're currently dealing with at the moment doesn't make a lower low than the previous trough. It's still valid.
Okay.
And the more touches of that you have, the more I think that the pattern becomes valid, because it's showing you over and over, look, price is compressing.
It's like, come look at me, yeah.
Right?
Okay, that's a good point.
Yeah, that's a good question about the symmetrical one, because usually it's a descending or the ascending that has multiple touches at that key resistance level.
Okay.
It's either a flat top or a flat bottom breakdown, right? And so then you usually have touch like off that 38 on lead.
Yeah, that's why I think this one's
multiple touches.
interesting, yeah.
Yeah, good question, but I would say definitely it's not beyond adjusting either the bottom or the top trend line here.
As long as it's still supporting that pattern, and because
Exactly.
like you know, I think like we were mentioning earlier too, because I was kind of like just not forcing triangles that aren't there, right? But in this case, it does look like there is a symmetrical triangle.
Absolutely.
Yeah, no, I appreciate all the answers to the questions, because yeah, lots of stuff. Very interesting topic.
All right, Dale, I don't want to butcher your last name, Ruzart? Is the 200-day EMA and SMA crossover an indicator? Yes. We're going to get to that one on moving averages week. It seems to work. You make one red and one green as they cross. You can get an idea. So look, the way that I know how to use the crossover of the moving averages, especially the 50 and the 200, is when you are not in a market that is consolidating. When you're in a trending market, that's when you use moving averages. You don't use them during periods of consolidation, because they are often very fake out-ish. So if you're moving sideways, you're going to have the 200 and the 50 cross over each other umpteen amount of times. Okay? It's when you have a trending market, whether the upside or the downside, that you're going to use them. And it's bullish when the 50 crosses the 200 to the upside. That's called the golden cross. And it's the exact reversal of that when you have a downward market and you have the 50 cross the 200 from the top to the bottom. That's called the, what is it called again?
Death cross.
Death cross, that's it. All these names.
So many names. I think that's like the big thing too, is keeping track of all of the names when preparing this.
Right.
So many different patterns.
So that is the look there. We're not going to get into that today, because that is for moving average week, which we don't even know, and we're going to do that.
So many weeks.
So many weeks. So many different things to cover, guys. In technical analysis, it literally is endless. So there's any number of topics we can cover. Elon, yeah, I got burned before fantasizing on these patterns, and the market just turned 180. Yes, you definitely have to make sure you are using risk management principles that we talked about last week in your everyday trading. Tony Price, do you think that the more times the price action hits a certain level, it becomes more likely to break up or down? It makes it more relevant. Whether or not it makes it more likely to break up or down, I'm not going to opine on that, but it makes that key level more relevant. Again, let's go back to Liotto. Let's look at that 38 level. Okay, on the daily, let's go to the day. There we go. Look how many times we get touches off that 38, and then when we get the touch off 38, it tanks.
Swoop. Yeah.
It literally tanked. It went to 35. You got three. Oh, sorry. So the previous day, before we got to 35 on September 25th, the previous day had a high of 40. You move $5 on a stock that rarely moves $1 or $2 in one day.
And
right?
high volume too.
On high volume,
yeah.
Exactly. Thank you for reminding me about that. It's not the highest volume there was, but it is an outlying volume candle. There's no question about that.
Yeah.
This one over here. So I would say the more touches you have at a level, the more it's showing you that this level is more important. If you get a couple of touches, it doesn't equate to if you get 20 touches at that level. Why? Because it's showing you, no, buyers are pushing it up every time it comes into 38. That's either indicative of a big institutional buyer buying at 38, or a trader with a lot of money that likes that level at 38. Whatever the thing is, you don't have to figure out why it's doing that. You just have to know that that level is relevant, and it becomes more relevant the more touches you have there. All right, moving back up. V, nice name. Does that apply for day trading as well, the moving averages? Yes. So moving averages are also relevant in day trading, but like I made the point last week, you don't just get in willy-nilly or get out willy-nilly at moving averages because they're moving averages. No, you have to look for how that particular instrument, whether it's crypto, Forex, equities, the futures is respecting that moving average. If it's not respecting it, just goes through it up and down and it's completely insignificant on the chart, you're likely shouldn't be using that. It's when you see that the actual instrument is respecting that level, then you start making it or including it into part of your analysis and part of your strategy making. So, and we talked about that last week with VWAP. Remember that retracement that we had on the futures in the VWAP? You know, sometimes VWAP is completely insignificant.
Yeah, it really depends on, and some stocks won't interact. What was that? Interact. I was British for a moment there. With the same indicators in that day or in that given time frame, right? So, for example, and I'm using it, but it's also valid. I'm not using VWAP in this case for myself. But basically, if you were trading Meta earlier today, I would say you would want to use VWAP, right? We had that beautiful swoop up off of VWAP. This is like what, like $4 there or something at 9:30. Swooped above, then we swooped back kind of below, dancing around VWAP for a while there. Now VWAP is not nearly a factor, right? So now, if I was trading this earlier, I think definitely I would be looking at VWAP to consider my entrances and exits, right? That would be a pattern I'm interested in. Right now, I'm just interested because we did have, I wouldn't say this is like necessarily a triangle, but we did fail that flat bottom kind of area for a while. So I am, swooping. We're swooping down. I'm hopefully trying to, hang on to the edge of the iPhone. I guess it's not Apple. Why am I saying iPhone? I'm gonna hang on to. The Facebook buy, this analogy got away from me. But yeah, we're in the Meta short for now is the point I'm trying to make. And I got in, if it was earlier, VWAP would have been valid. Right now, VWAP's not valid. So long story short, time frames, different time frames and different stocks really depends on for indicators.
Okay, guys. We are brought to you by Benzinga. Use the link in the description for Benzinga's Black Friday deal, the greatest deal of the year, including 75% off Benzinga Pro, monthly subscriptions as low as $49.25. The everything terminal for retail traders. Visit pro.benzinga.com and use the coupon code TTVNOV to save 75% off now. New subscribers only. Conditions apply. Adira, it has been a November to remember. And, we talked about October. Yeah.
That was really bad. I'm so sorry.
Right. Oh, it's okay. Probably not as bad as my November to remember, but yeah.
Well, I kind of took it from there. We melded them together.
A little bit, yeah. Yeah, it has definitely been a November to remember for the longs, at least. I don't know how the shorts feel in that regard. So the bears maybe they don't share our sentiment.
They need to go into hibernation.
I don't care. Sorry. Hugh reaction. Hugh G reaction. I feel like there's a play on words there, but maybe I'm wrong.
Like Sharif, huge reaction?
Huge reaction, yeah.
Huge?
Huge reaction. This is why you're sitting there, and that's why I'm over here, because you can see that huge reaction. I love it. Speaking of EMAs, we are now at a critical point on the minute chart of the NQ. Will we continue to hold it? Yes, because I'm not charting and I'm not basing my NQ trade off moving averages. As I stated earlier, I am looking at that 16,000 level as the key area of support or resistance on the NQ, and that is what I'm charting off. I'm going to give it a couple of shekels below 16,000 if it makes its way there. But previously, if we zoom out just a bit, you'll see that 16,000 did act as a level of resistance when we made our way up, and then we khwadunt, lo and behold, to VWAP. VWAP held like a dream, and then we made our way up, breaking 16,000. Then look at this, the base of the price action here, all holding 16,000. So what do they say about support and resistance? Resistance becomes support, and support becomes resistance once breached. Hence, I'm trading off that. I'm not trading off moving averages. I'm not trading off anything else, a chart pattern on the future. That is what I'm looking at there. So make sure to listen out to why I'm getting into a trade. Typically on the futures, it won't be because of a moving averages, but that isn't a hard and fast rule. It's just something that I've observed. Fry, is AMD forming anything? I haven't looked at AMD today.
There's another mention of AMD that I actually have it pulled up right now. I'm trying to kind of decipher this here. This was tagged at you, but I saw it and I was like, may as well. Kendall Lopez, shout out, thank you. There's a descending triangle in AMD or AMD, 1 minute. I mean, yeah, I think I would kind of argue that that's there's different ways you can look at this one too, though, right? So we had definitely like kind of in general just lower highs, I would argue, from about 10:30ish. But also, yeah, if you want to specifically chart, and I will because that's what this week is about. Here we are. I mean, it's not like an exact lower, like flat bottom, but we had a flat-ish bottom over here. And then we had, let me get this chart thing over here. There we go. Yeah, I mean, I would argue it's not perfect, but it definitely we are seeing consistently lower high, lower high, lower high, lower high, flat-ish bottom, and then we had a break to the downside. And we're just barely positive on the day, so I do think it still kind of goes with the general theory that usually, you know, we have the descending triangle broke to the downside. Yeah, I would argue there is some descending movement there. Also a little bit, I was gonna say, is it kind of symmetrical? No, it's mostly descending. But yeah, thank you for that one, Kendall Lopez, and I appreciate you saying the time frame as well, because that was very helpful in this case. We do have a bit of a 1 minute descending triangle on the AMD. The AMD, I don't know. There we go. AMD.
All right. All right, I was just looking for questions here. Are you going to go long now, asks Diaz. We have the 20-year auction at 1. I'm already long, my friend. I've been long like almost, how long have I been long? What time did I get in?
It's been a long
time. I got in at
time.
11:40, so, you know, an hour and 20 minutes almost. Asks Diaz29, just want to keep you updated on that. BlackBerry, why don't you wait for the NQ to touch the resistance if you think anyway it will correct to that level? I didn't say it's going to correct to that level. I said if it corrects to that level. Ideally, for me, the NQ runs and touches 1650 without touching 16,000. I mean, I'm not saying that it's going to come down to that level. What I'm telling you is my plan. If it comes down to 16,000, I'm going to give it a couple of points below that level because it's not a hard and fast level that can't be breached or shouldn't be broken. No, it can be as long as buyers step in right away to show you that we're not touching 15,000 today. We're going to 1650. I'm getting a lot of blowback on that. But yeah, that's what I'm trying to say by say. Yeah, I'm not doing that snap, Katina, man. I'm sorry, brother. That's probably going to go viral. But yeah, that's my answer to that. I'm not saying it's going to touch 16,000, but I am making a plan to decide what do I do if it does touch 16,000. Yeah, shout out to you, BlackBerry. All right. So what time are we? About 4 minutes, guys, from the 20-year note auction. Now, in case you guys are interested in trading the 20-year note itself, and you don't have access, obviously, to the futures contracts for these yields, you can trade the actual ETF. It goes by the ticker TLT. I believe that is is that what, what's his name had, the short position? What was his name? Ackman? Was he short TLT, Katina, man, or was he short the actual thing itself? It was covered.
I thought it was a cover.
He took a short on the 30-year or 20-year? Yeah, it was a longer duration. Well, anyway, the TLT, guys, you can, it's the iShares 20-year plus Treasury. This is kind of the ETF for the auction that we're going to have now. This is the TLT over here. So if you guys want to follow along, this is probably one of the instruments you can look at. There are others, obviously. You can go and look at the 30-year yield. Long duration. He was, yeah, long duration bond short. And that was a big thing, again, with Druckenmiller, you know, throwing some shade at Treasury Secretary Yellen. Stan Druckenmiller wants to kick the can down the road. He wants the Treasury to issue longer dated treasuries because he doesn't want to be responsible for having to pay them soon because of the insane budget deficit that's burdening the United States government right now. He's like, kick that can down the road, baby. Which seems to be like what politicians do nowadays. But in any event, yeah, that was, you know, a kind of a going back and forth, but since settled down since then. The crazy stitch lady. Sharif, are you worried about UNG? Because I know you said something about under 6. Yes, absolutely worried about UNG. If it closes below 6 today, I'm definitely keeping my eye on it. But what I see is $6 is an absolute support level today. I did add this morning at $6. If this closes below 6 on a closing basis, I will take the L. Okay? I will take the L below that, and that's just the way it is. I'm good on 2 of my trades, out of the money on 2. But I'm getting real close to being back in the money on Caterpillar, as I did get some good average dollar cost averaging in the 220s. Now it's back in the 250s. I'm doing well on Lee. I'm doing well on Apple, out of the money on UNG, and almost back flat on Caterpillar for those following along. Adam, Bill Ackman covered his long duration bond short. Yeah, I was just wondering about which one he was in. Was it the 20 or the 30? Jay Lee, I'm pretty sure you're good on UNG. Buying at the bottom is always smart. Well, give it an opportunity. If it breaks, it breaks. I mean, I'm not married to the position, to be quite honest with you. All right, what time is it right now? I think we're real close here to the 20-year kicking in. We're about 12 seconds. Now, I typically don't get the result.
I'm just dancing because I'm in the meta short and it's tanking. So, which I know Sean is also in. I got in. I didn't get in. I got it 337.85. Oh, nice.
Ooh.
Okay, look at that.
Here we go. So we're very close here. Now it is 1 o'clock. We're going to look to see what kind of print we get on the bond. Again, my app here, investing.com, it's a bit of a delay. It doesn't show me what the actual yield was on the particular auction. So if you guys know, please tag me in the chat. I know Darwin usually has a much better reaction time.
Yeah, he's always on it.
Yeah, Darwin usually gets a better... He usually tells us what it is. Anyway, still waiting, but just to remind you guys, previous print for the yield, 5.245. Now, the higher the yield, the lower the demand. The lower the yield, the higher the demand. Okay? So that's how it works there.
This is a cool new angle.
I know.
Look at this.
Look at my bold spot.
Where?
I don't know.
Where?
I don't know. I'm just joking. Meta testing another support level. That's for you, I'm assuming. And then Evans, NQ making a descending triangle in the 1 minute. Yes, good look there, but it is very, sporadic. I would say you need to take that 16,000 level as your level rather than looking at that. But yes, you are identifying that correctly. Treasury yield. Adam says, Treasury 20 yield 4.79 before $16 billion auction. Okay, still don't have anything here. Last time it was 5.245. I'm pretty sure it's not 4.790. We'll see what we get here, but still waiting here or there.
Yeah. I mean, I'm also still waiting for Meta to do its slow swoop to the downside. I don't know why I'm doing these weird oh, yeah, okay, yay.
Meta's tanking it.
Love that. There we go. We're going to take some cash there, too. I already did take some profit a little bit earlier, but yeah, I am really happy with this one. Although now we're kind of running back up a little bit, but we're still not close to my point of entry, so we're just going to chill a little bit. Yeah, Meta, I kind of got in where we saw this failure of support. I liked that we had kind of, honestly, I would almost argue if we were to chart it, and bear with me here, I'm going to do a little charting. Did I do the wrong one? Okay. We had sort of a flat bottom-ish here on the 5 minute, and then we had a little lower baby highs. Right now we're coming back up a little bit, so we might have to run out of Meta for a bit. But yeah, I mean, we're not near my point of entry, so I'm going to chill out for just a moment. But yeah, I would honestly argue potentially on the 5 minute. It's not perfect, and it's not like the strongest one in the world, but we did have lower highs on Meta with a decently flat bottom. It was almost a descending wedge, and then we did break to the downside. And now somehow we're above my point of entry. So yeah, Meta's a wild one today. And yeah, always trying to see, I mean, sometimes patterns aren't perfect, but I think in this case we did have that sort of descending wedge-esque form on Meta that did come to fruition with a break to the downside.
The Katina just got filled there at 30 cents on the bottom. Look at the futures, baby. Look at this pump up right through 60.035. Some dude in the chat was like, yo, bro, your position's about to go red. Yeah, where are you at now, man? Where are you at now, bro? Look at this pump up to the high side. 60, this 40 pennies in the money. Let this one run. Big move up there on the future. Nice move up on the future. Here comes 16.050. This is the level that we were at last time on the algo spike. And be careful at this level. because this is the level I earmarked for resistance. We could blow through it. It could be absolutely nothing. But there we go on the future. This is absolutely pumping to the high side. Wow, the futures. We're spending the money again on this one. Wow. Okay, that was a nice move on the future. I can calm myself down now.
Yeah, this is pretty funny. Someone at Fee rhymes with AMC in the chat. Sharif, so modest, LOL. I mean, I love that voice you did. I don't know where that came from, but that was amazing.
I do a voice or two there here.
Right? Yeah. I mean, I was accidentally British when saying the word interact earlier today, so we do what we can over here. But yeah, I think this has been it's been a very interesting one. Also, I guess just to reflect on meta, we did take some profit. It ended up being basically a zero sum for the most part. We took some profit here. We lost a little bit here. I should have probably taken more profit down when we had that swoop to the downside. Should have prepped my outs a little bit better. But yeah, this one came flying back up to the upside very quickly. Going to keep an eye on meta because I like the volatility of this one. I should have been a little bit scalpier, but it was a very good short for a couple seconds there. So there we go. Let's see what else. My ears, I just saw in the chat there. That's great.
Sorry, the Chilean Nightmare was complaining about his ears. I get a little excited. I'm sorry, man. The Chilean Nightmare is on his own today, guys. Throw up ones for my man Fabian in the chat. The dude is killing it on the ones and twos, all on his own today, man. No Ram. She's got COVID or something. Who knows what she's got?
Like the hands.
No, I'm just kidding. Ram's much loved by us over here. There you come. Here comes the ones for the Chilean Nightmare, baby. The dude's killing it on the ones and twos. Shout out to him. Shout-y Deba. You're good with the NQ these days. Bro, I'm just lucky. That's basically all that it is there. Shout out to you. Thank you for that. All right, Adam. Adam gave me the, I think the result. We didn't even talk about the result. Guys, holy demand for the 20-year. Guys, last time around, 5.245. That was the yield. The higher the yield, the lower the demand, because you have to entice people to buy the bond. 4.780. Demand is increasing with the 20-year. That's a good look there. Not bad, as the yields definitely coming down. Keep your eye on the yields. I look at the 10-year, I look at the 2-year, I look at the 30-year, and let me look quickly here at the 10-year. The 10-year just spiked big boy down now, 4.422. Let me look at the 30-year. The 30-year came down as well, but not by that much. And the 2-year is still positive on the day. The 2-year hasn't moved all that much. But it's been a good look for the futures and for some of these big tech names that often move with the futures, guys. So shout out to whoever took that. And yeah, the chat is littered with ones there for my man there. But let's put 2 for Ram. Oh, what a gregarious guy. Look at this guy. Look at this guy.
I love that.
Yeah, I know, right? Me trying to troll Ram and him, he's standing up for it. That's his partner in crime, baby. Any reason the market spiked up, asked Drift R. It's because of the 20-year note auction, 20-year treasury auction that we had at 1 o'clock. It was received with a lot of enthusiasm and therefore ran up, and that helped buoy these equities as well. So good look there. Is it one? Yeah, we'll circle back.
Yeah.
Circle back.
Yeah. And actually, this question here from Blackberry, I think, kind of ties into ascending triangle. Adara and Sharif, did MicroStrategy just break out of an ascending triangle 4-hour/monthly? Honestly, yeah, we'd have to look at this one a bit longer. I don't necessarily see it. We didn't have like a ton of touches of the flat top, right? We did break up out today, but yeah, on the 1 monthly, I can't quite see it. I'm gonna look at the 4-hour. I mean, we're definitely positive on the day. I think sometimes too, things can, and I'm kind of learning this myself as well, definitely. Sometimes things can have like a movement up, and it's not always correlated to like a pattern, right?
Gotcha.
We were talking about that earlier too. I think this one might have just honestly been a strong name, because what I'm seeing more is we're just kind of having these, honestly, kind of within a range. Like I'm not really seeing, at least in the 4-hour, myself anyway, much of a triangle type formation. If you have any like clarifying points on that, sorry, definitely let me know, because yeah, I'm trying to see it. I'm not, like I am seeing, higher highs here. We did break out of that, almost a triple top here, but I think what it might have been is just that we are having like a breakup from the high side, not necessarily accompanied by a triangular format. But yeah, I appreciate that comment. Here we are looking. But yeah, back to ascending triangles. An ascending triangle is when you have we have like a ceiling a little bit here. There is a ceiling, and then there's a higher. If it were an ascending triangle, I think what we'd see more is we would have seen higher lows here, and then a swoop to the upside. I will pull up my little sample triangle here too. Yeah, so as you can see here, obviously these are not charted, they're just little Investopedia drawings, but they do the job. Higher, we had flat tops and then a higher low, and then a swoop to the upside. And as we were talking about today too, because I had this question, same with the descending triangle, the more meaningful touches you have of that flat top where we're testing that point and we're not breaking it, then when we do break it, it'll be a bit more meaningful. It should be, at least anyway, a bit more of a meaningful breakout.
Absolutely, absolutely. But I need to point out the futures are absolutely skyrocketing now. 16,068.5 HOD on the future, but I still am of the belief that we could get a big move down. We could see 16,050 act as a level of resistance, okay? Because that was a spike up on the algo spike last Tuesday after we got that amazing CPI print that came in way below expectations, took everybody kind of by surprise. I don't want to put too much weight into an algo spike, but it is the most recent level that we have to work at these levels over here, these elevated 16,000 plus some odd levels. Before that, you got to go back into midsummer really to find anything around these levels. So keeping my eye at that 16,050, all the while knowing we are really pumping here 16,068.5 high a day. You know, it's not beyond the realm of possibility that we see 16.1. We could see 16.1, and we need to be ready for that. And if you're short-minded, maybe you're waiting for a 16.1 touch to kind of take a mean reversion back into maybe 16.05. I don't know. I'm just throwing some levels out there, but we have a big move up on the future now, about like 60 some odd points in the money on this bad boy, letting it run. Let's see what people are asking here, because it was a quick, I saw a tag there. Jay Lee, how many pips are you getting? Well, you see it right there. It's in front of you, man. What else? There was a quick question up here. Jameson Barna, IWM Russ has a lot of room to run to catch up to the market. Thoughts? Yes. Yes, you're absolutely right. The Russell has been absolute hot trash this year because of the elevated interest rates, and we know why that is. The IWM and the Russell 2000 is composed of small caps. Small caps typically have less cash on hand, meaning if they want to go anywhere to expand their business, they're going to have to go and borrow money. They're going to borrow money at elevated levels. Elevated levels of borrowing means tighter margins, less profits. It's as simple as that, okay? So that's why they've been beat up. They do better during periods of low inflation, and they do low interest rates, and they do better in they do worse in periods of high interest rates and better during periods of low interest rates. So when we get wind that there may be some cuts, especially ahead of schedule, people talking about March cuts and July cuts, all of a sudden people want to jump the boat. You don't want to wait till the cuts come in and you've missed the boat. People want to jump in before, and that's what the market does. Discounts everything usually 6 months ahead. So that's what that is there. But I digress a little bit from the topic at hand. Magic Mike, best name in the chat. Please enlighten us about how you are scaling out of the NQ. Just saw your chart, regular take profits. Yeah, that's a good question. I got to tell you the truth, man. These were unplanned scales. Let's just call a spade a spade. I didn't have levels that I want to take it out at. The first, if I had to be pressed to say, Sharif, you made mistakes here scaling out early, but if you were to do it all over again, where would you take some out? I would say 16,050, because that was the peak of the resistance on the last Tuesday spike. But you can clearly see that I've taken it out before that. That's because I suck as a trader, and there's just really not much else to say about that, okay? Now, not quickly, but let's go back here into descending triangles. So let me load up my bad boy over here. Now, I don't want to use Lee Auto again. I'm going to borrow.
It's such a good one, though.
Bore everybody to death with this Lee Auto. Guys, it is the exact opposite of an ascending triangle, a descending triangle. But I want to keep making this point over and over and over. This descending triangle on Lee Auto was a bit of an outlier because it's supposed to be preceded by a big move down. A descending wedge or a descending triangle is a continuation pattern. Continuing pattern meaning that it is continuing the trend that preceded it. In this case, you can clearly see that the trend preceding the descending wedge or descending triangle was an uptrend, okay? We started that, we troughed out in November of 2022 around 12.5 bucks, and we got all the way up to 47, almost 48 bucks there back on August 7th, August 6th, no, 7th, I'm right. But the point here, why I'm showing you this, is because of the umpteen amount of touches at 38, none of which were broken for over a period of a month. And then all the while, you had the lower crests, right? You had the highest crest here at 48, and then we crested out at 43.25, and then we crested out at 41.5, and then we crested out at 40.25. And then you got that big boy break through 38 on high volume, on higher than normal volume, okay? Hence, this candle over here showing you that the outlier, this is an outlier in terms of the amount of volume that's typically done on the day for Li Auto. So you're looking for the flat bottom break, which is what we have over here. 38 level was the flat bottom, and it was supported by a series of higher lows, resulting in the break of a clearly defined support level on high volume, higher volume, and look what you got after that. If you took 38 or 39, you were well rewarded there as it got down into 31 bucks before it started trending back up a there. So that is the one that I always show. It's the one that, you know, it's always in my mind, I guess, because I was getting rinsed on it.
Yeah, I guess like the ones you feel personally are always more memorable. Yeah.
Well, yeah, exactly.
But yeah, no, I think in terms of, I can go into symmetrical triangles as well, but yeah, in terms of descending triangle, in terms of all of them, we were talking about this earlier too, with regards to confluence, shout out to Obi. But yeah, I think there is that confluence between, you know, with that one you had the volume spike while you also had this pattern. So it was kind of that confirmation to really bolster, I don't know what this action is, but bolstering that pattern, really making, having extra confirmation, because like we were saying too, patterns on their own don't always necessarily mean there's going to be movement, right? They are mostly just predicting past items, but if you have these events with stuff like volume, if there is a catalyst as well, if you have all of these different elements converging, confluencing, if you will, you are more likely to kind of have a pattern that is meaningful, right? So that's kind of note here. But I will move on to the symmetrical triangle. Yep. And I know Rivian earlier was an example. I think Tesla might have been as well. Let me show Tesla. Yeah, I still have it charted. We did have the symmetrical triangle on Stressla. And yeah, honestly, still looks like it's kind of coming to fruition and deciding where it wants to be. So I'm going to move this bottom line here because I think it has moved in life. Yes, so with this one, I'm going to start with the tops because I think the tops are a little bit clearer here. Higher, lower, high, lower, high, lower, high, lower, high, lower, high. For the bottoms, we had, you know, lower, low, higher, lower, low, lower, higher, low, higher, low. It's so hard to word this.
Me and you both.
And then we kind of had this moment where basically what I'm trying to say here is with the symmetrical triangle, you will have this downward sloping motion to the right
chart
with Tesla. As you can see here, we had this downward sloping motion. And then at the same time, we also had an on the top, and then we had upward movement on the bottom. So basically, it's a series of lower highs and higher lows, I said it right, converging together, and then at some point we'll have a breakout. Now this one, unlike the descending wedge, which usually breaks down, or the ascending wedge or triangle, which usually breaks up, there is a little bit more of, it's a bit more of an interesting, you know, situation, a bit of a pickle, if you will, with the symmetrical triangle, because it honestly, as we were saying, it kind of sometimes can be a bit more of a continuation pattern or a reversal. It really depends. Yep. In this case, with our friend Stressla, we're down on the day, right? So as long as we can still kind of see this continuation of the pattern, it might be more of a case where we break to the downside because we're slightly down on the day. But because we're a little bit more flat, it could kind of go either way, right? So it's really just watching and I think being wary and waiting to see that break before kind of making your move, I guess. But yeah, definitely we are seeing, it's also some compression. I think that's also how you can identify a symmetrical triangle if you're seeing compression, because it's a compression pattern as well, right? So we have this, and now I'm going to redraw my bottom trend line here. We have this, there we go. Look at this, it's so pretty. We're seeing, oh, if I could get it to sit, there you go. So we're seeing kind of this squeezing, this tight compression here in this Tesla. This line is a little bit lower, but it's fine, right? So it's like the closer we get, the tighter we get. And also with this one too, we're talking too The more touches you get, the more kind of exciting or of interest the pattern is. We've had so many touches to the high and the low side that I think when this decides to break out, it could very much be of interest.
Absolutely.
This is another case too where another factor intervening here is also VWAP. VWAP is very much of interest with Tesla in the 5 minutes today. We're very much dancing around. So we have this, not all indicators are always relevant, but in this case, Tesla does look like it's been very much interacting with VWAP. So we have this combined with, especially to the downside, the catalyst of Jefferies cutting the price target from 250 to 210. We have this pattern. It's basically all of these different elements confluencing to give us a little symmetrical triangle.
The Katina Man is now short Tesla at 234. So anybody following along with the Katina Man's trade, be advised there. He just took the short. Say it again. He's starting to cover. So he's wetting his beak as it's coming down. He's already 70 plus pennies in the money on that bad boy. So anybody looking for the Katina Man's trade, be aware there. Katina Man, I want to show you something here. Look at this. Look at the screen. What do you think about that? You think that's going to be the December 17th score line right there?
Well, I don't think the team on the left has a chance of getting it.
Oh,
December 17th?
Yeah.
I thought you meant the next
We trolled Neil with that earlier. He was very displeased with me.
You worked really hard on trolling that too. I knew you had that planned.
Look.
in Vegas.
Say it again?
I think in Vegas, the line will probably be.
Yeah. I got to agree. No. I'm just trolling Neil when I say that. I think this is an absolute 50-50 game.
I like
guys.
the honesty too, where you're just like, I mean, it's
Neil.
trolling.
That's what we do. We come in the morning, we're nice to each other, the camera comes on, then we start cutting each other up. That's just the way it works around here, right?
One of the beautiful blessings of working. So much action always, right?
Yeah, I know. I love working here. And
so
it's
much
just
fun.
always good times. There's just no doubt about that. But yeah, guys, nice move. Now let's talk a little bit about some of these big cappers. We haven't really mentioned many of the big cappers today, but look at Microsoft. Microsoft is an absolute rocket ship on the day today after going red on the day, and you saw the Katina Man wet his beak on that. Short. Now it's the opposite way as it's knocking on the door of that 378 after Sam the Man Altman was let go of his position there at OpenAI, or as Cal Canis likes to call it, closed AI.
Does he call it that?
He actually does.
Someone said that in the chat too.
Someone
I didn't
called
realize.
it closed AI?
Yeah.
Yeah, well,
I had no idea that was a Jason Calcanis thing.
That's why, right? But yeah, Microsoft, in case you're just joining us today, Sam Altman was let go by the board of OpenAI on Friday for what they said was him not being forthcoming with the board. There was pressure on the weekend by some of OpenAI's biggest investors, chief among them, Microsoft and Satya Nadella. They were pushing for Altman to be put back as CEO. That didn't happen, apparently. And in response to that, they're now bringing Altman in as head of AI at Microsoft, and it looks like the market does appreciate that.
Oh, yeah.
It's up over 2% on the day, and Softy, we already know, is making higher. These are all-time highs here for MSFT. So yeah, make of that what you will, but there you go. Higher lows all throughout the day there. Now really getting into that algo spike, that institutional spike earlier that we got into earlier at 379.5, and that's where we kind of topped out early in the morning at around 4 a.m. So Softy, the Katina Man is dropping cash there because his BA
that's
trade
so good because it's a plane
is a $6 winner. Sorry, how much now? Well, I don't even have Boeing up.
I'm going to pull it up.
Look, I got Boeing up right here. Boeing is now almost $219.
It's almost
guys.
$8.
Yeah, the Katina Man was long right here. So there you go, bro. Katina Man giving you those prints on the day, baby. And it's a good look there for BA. In case you're wondering what the hell is going on with Boeing, the Dubai Air Show was last week, and they got plenty of orders there. It's just going to be a matter of can they fulfill these orders and get them delivered rather than the exponential delays that they always seem to be encountering. Them and their partners at Spirit Aerosystems will have to see how that one develops on the day. But sorry, I wasn't finished going through big tech over here. So we talked about Softy and the strength of softy on the day. With the Altman news, Amazon having another good day. It had many good days last week. It's trying to get back into that 148 level that it saw on Thursday, but not quite there yet as it sold off a little bit on Friday. But Amazon has been absolutely pumping the last little while. Like, I mean, you only need to look at the hourly there. Look at that trough we had on AMZN back in late October, man. Holy cow, we were at 118 bucks. Now we're talking about 150 possibly coming in on this name quite soon. So AMZN strong on the day. I gotta tell you, the weaker names have been Tesla, and that has been likely as a result of the controversy surrounding Elon Musk over the weekend, and with tweets that he was putting. Whatever your view is on the issue is really irrelevant. We are trading price action, and your opinion doesn't matter. Neither does mine.
Yeah.
Neither does mine, because I don't have the buying power to move Tesla, nor do I think anybody on this floor does. So we're trading the price action. But the more I look at this, the more I like the fact that you called this out as a compression pattern here, a symmetrical triangle. Look at this. Look how the price is compressing.
I think some people in the chat were saying that too. I do not want to take like full credit, but that's been the hill I've been dying on in terms of examples. It's been a really clear one today, that symmetrical.
It looks great there. I got to tell you the truth. Good call by you there. Rory Alderson wants to know what the Katina Man nickname is. I don't know, man. I woke up one day and I just like came out of my mouth, Katina Man. One day, it came out of my mouth. I start calling the Chilean Nightmare. Just the way I am, bro.
He likes the
plan
nicknames.
this kind of stuff. But it's not a movie, no. If that's what you're asking, no. The Katina Man is not a movie. It would be a good movie, though. I think he'd. Well, you must know. He must know who you are. He has to know who you are. Blackberry asking, is that an inverse SHS on SoFi as well? Sorry, what's SHS? What are these acronyms?
Is it like Head and Shoulders? No.
I don't know.
Let
me know what you mean, Blackberry, and tag me in that. Look at the futures pumping again. There we go. High a day, 16,075. This thing is a rocket ship, baby. Are we going to see 16.1, Adara? Because we are absolutely pumping to the high side here.
That's a beautiful little swoop to the upside. Congratulations on that trade.
There you go.
Yeah, there's a question from Blackberry, also a different one with regards to this kind of compression pattern as well. I think it's a really solid question. The candle spikes to the downside in Tesla are longer. What does that tell us? So these are the wicks. So we were kind of, and this is something that I think, like Sharif, you've been really helpful with teaching me with that, is I have Tesla up here to kind of show as well. The wicks are usually less important than what the actual body of the candle does, right? So it can kind of show, though, in this case, what it shows is that we tried to sell off, but in general, like the buyers were more powerful here because we did end up with this green candle to the upside. So the wicks basically are kind of price action that happens throughout the body of the candle, but it's not encapsulated in where we started the candle, which would have been around this 233 here, or where we closed the candle, which is this 234. And I have like candles planned for later too, so I don't want to get all ahead of myself here, but I thought it was a good question. Yeah, so basically when you're charting, you generally, at least what I've kind of been taught and what I think makes sense, at least also for when I'm setting my stops, is I generally, like a couple little wicks are not going to be as significant as where you opened or you closed the candle. And don't worry, there are more candle lessons planned. I have lots of candle related notes. But yeah, so it just kind of shows that we attempted to sell here. We couldn't really manage that sell off. The buyers were overpowering at that moment. That is my interpretation of a candle wick. So in general, yeah, what it kind of means, Blackberry, is that it's not as significant as price action as what happened in the body of the candle itself, which is the thick, chunky part.
People are making fun of me because I'm loud. I'm sorry, guys. I don't mean to be excessively obnoxious. Shout out to my boy Hashem right now, who's watching the stream and sent me a message. Appreciate you for supporting my man, and thanks for watching the stream. And I hope you're learning a thing or two about intraday day trading. Him and I talk a lot about this. I know he's looking at making his portfolio. Shout out to him. I hope he kills it on the day, my boy Hashem. All right. Let's see if there's anything here that we can talk about quickly. Sharif, did you punch out a 5 to 10% of your position at those levels? You still have around, no, I have one more out left, my friend. Yeah, it's not 5 to 10%. It's one more out. Nick Dubb, where is Neil at with his GPS trade? Neil? He got out a while ago, Nick, so thank you for following up on that. Wow Sulfate says, I am Cuban and you are not loud. Okay. I don't know what that fact that you're Cuban has to do with it, but I'm guessing you're trying to insinuate something about Cubans. I'm not going to participate in that, but yeah, thank you for not calling me loud. I got volume on max. Why is the sound still so low, says Rabbit? Probably because the Chilean nightmare put me down because I kept yelling. I'm just assuming. Jameson Barna Adara, is there an ascending triangle on GDX? You want to have a look at that?
Yeah, I actually just pulled up GDX for that purpose because I saw this. Do you know what time frame you were looking at? Because I think that would be just for myself to make sure. I have the 5-minute right now, and I sort of see what you mean in that we do have kind of this flat top here. I'm going to see if there's any other time frames in which it is kind of more evident. Yeah, I think what's kind of tripping me up and making it hard for me to see, let me check the 1 minute, an ascending triangle, is we do have a flattish top, but okay, so the one, I can kind of see it on the 1 minute a little bit. We have almost a flat top and then slightly higher, higher lows, English. Yeah, so if we continue to have a higher low here, then I think that could be potentially a flat top on the 1 minute time frame. Also, though, we were talking too about it kind of being affirmed if we had more touches of the top, right? So it's not, it's a little bit of a lopsided flat top. It's like slightly askew. And then B, I think we would need a couple more touches to have a more kind of consistent, I guess, flat top. Because we almost have the flat top here, but we only have one kind of like 2 touches here, right? So like we were saying with that Lee Auto example, although it's descending, so it's the opposite, we did have with that Lee Auto example so many touches where we were having like we touched the flat bottom so many different times before it broke. We kept seeing, you know, these different lower highs along the way. In this case, we have maybe 2, almost maybe 3 discernible higher lows, and then sort of 2 kind of flat top touches, right? So I think it would need to be a little bit more movement in order for me to kind of consider this to be a flat top at this time. Definitely an interesting one, though. And I appreciate you for bringing it up. Also, I guess, yeah, if you want to go even further, you know what? We'll chart it here because that's what we're about this week. Also, yeah. Okay, so here we go. See, the thing is, it's still not super flat. But yeah, if you were to say this was kind of the flattest top too, then we'd have 1, 2, 3, 4, at least on the 1 minute, higher lows. So then what I would want to look for is I'd want to look for confirmation. So are we kind of seeing other, even not necessarily if it's like a flat top, but we want to see confirmation in other time frames. Like, for example, are there any other bullish signals that we have going on the 5 minute? I'm not really seeing anything right now, but yeah, I would think for Jameson, it's kind of in addition to it sort of, and I would say it's maybe a weak flat top. I'm not 100% convinced it's a flat top, to be quite honest. There are a couple of indicators there. I'd probably wait a little bit, and I'd also look for some other bullish, I guess, signals in other time frames.
Okay. Renata keeps asking about SoFi. We're going to talk about it for Renata. All right. SOFI on the day. I guess Renata likes this long, and this is a good looking flat top over here, Renata. Just the volume is a little suspect on this, but look at this clear flat top at 676.
Oh.
And this is what I would call an ascending wedge. Although it's not really as clear, you have this very clear bottom trough over here, and then you have a higher low over here at 668, another higher low at 670, and then you're met with the same low at 670. It doesn't make a higher low there, but it doesn't go below it either. So this 676 flat top is very interesting. What I would say is look for a break of that 676, or you could get it in at VWAP, right? Because look how many times it's come into VWAP, Renata, only to be supported by VWAP and make a higher low. So it's interesting. Now, what I'm going to say to you is if you wait for that 676 break, how come I didn't put in the ticker? SOFI, pardon me, guys. Sorry, I thought I put that in. If you wait for that 676 break, then you subject yourself to possible bamboozlement, where it breaks and then the shorts institute there to squeeze out the longs. And then you get kind of bamboozled. But that is a very clear 676 top on the 5 minute on SoFi, and it starts back at 950. We've been rejecting off 676. So she's long at 670. That's a good look.
Nice.
You're getting an interesting, you got a perfect area, essentially off VWAP and off the low. right? So if you're looking at this to hold, I would say maybe give it about below 670, 669, then look for a stop out. But you're looking for that 676 flat top break. And if you get it, well, then you have an interesting area here around, well, it's a bit jaded here. Let me have a look. That 688 is an interesting top. Going back multiple days. Rejection here off 688, there, and you had this morning a 690 high. So that's an interesting look for you, Renata. Like 670 is a good level. Just look for that decisive 676 break. That's what I would say to you about that. Let's go on here. Hayden, what source did you use to see the bond auction results? Would like to bookmark for the future. So I use the investing.com app. And if you go to the investing.com app and then you go to more, which is on the bottom right-hand corner, and then there is a calendars. And then basically you can filter. Yeah, you can't see. Essentially, you know, the investing.com app, bottom right-hand corner, more, then click calendars, and then you can filter by country. I have Canada and the United States. That's the only stuff that I want to see. I don't want to see anything about England or Australia or any other country.
New Zealand. Yeah.
New Zealand, yeah, is not of interest to me. No disrespect, it's just not, you know, doesn't factor into my trading. And then it shows you there in the actual economic calendar what the previous was, if there's a consensus print, and what the actual is. So you'll have 3 data points on that. So that's what I use. I use it mostly for knowing the time of one of these major economic events, rather than, you know, for the result. The result takes a little bit of time to come out, which is kind of my issue with it. Fee rhymes with AMC. Does Palantir look like it's not going to hold its breakout of the ascending wedge? Let's have a look at PLTR. PLTR. So this is an ascending wedge, guys. All right, this is an upward channel. And Brendo and I were just talking back there, and he's like, you know, maybe you should get a little bit more basic on some of the patterns that you're talking about. And here, this is what I'm talking about. Look at this: higher low, higher low, higher low, higher low. But you're also getting higher highs, higher highs, higher highs, and higher. So this is an upward and ascending channel. Now you can trade this in a couple of ways. One, you can get in on the low end of the channel, so you wait until a dip touching the bottom end of the channel and get in. And then in that particular case, so say you were to get in here at the bottom end of the channel, let me put in the ticker quickly and then I'll make my point. PLTR. So say you were to get in at the bottom end of the channel there at 2140. Where would your stop be if you were wrong? Well, it would be on the break of the lower of the previous low. In that case, it's 2131. You would have to give it to at least there. If you don't, you know, you're not giving yourself enough room. Once it breaks down and it makes a lower low, the trade is no longer valid. So you could trade it like that, getting it on the bottom end of the channel. You could also short it at the high end of the channel. Like in this particular case, when you got into around 2160, you shorted, and then you made about 20 pennies as it came right back down into that 2140. That's another way to trade it. The third way is to wait for a decisive break above or below and then take the breakout trade. That's more risky, in my humble opinion, okay? Rather than playing the already defined channel that it's already presenting you with. So in this case, you could wait for a break of the 2140, say at 2137, try to ride it low, and you know, maybe take it to VWAP or something, or wait for the break here above 2165 and look for the breakout trade. But you know, in a day where there isn't really a catalyst to support a breakout trade, you know, I would say the less risky trade is to actually trend or channel trade here, range trade as they call it. Not my cup of tea, but yeah, that's the look there. Hayden, cool, thank you. Dan McIsaac, tagged in and above for the direct link. Okay, cool. Moving down, looking at some other things here. Look at GPS, says Nick. I know he was asking about what Neil was doing with his GPS. Look at Gap pumping to the high side, 1860. Good move on Gap. It's been a multi-day runner, Adair. Look at that
since
move
earnings.
up. Since Thursday.
Before. Oh my God.
Yeah, man.
Crazy.
We were like flirting with that $13 level, and now we're talking about 18 bucks.
Yeah. It said no to $13. It decided it could do better, and it said bye-bye. Stop the flirting. We're gonna go steady with 18 over here.
That's a good
Bye-bye.
look.
Yeah, it looks
I don't see a
beautiful.
particular chart pattern here. Do you?
I think it was no. I think honestly, yeah, I guess no. I think we're just kind of like, we had sort of a double top actually for a bit there.
A little bit,
A
yeah.
little bit, and then we broke up above. But that's like me squinting. Like we said, like, there doesn't always have to be a chart pattern, right? So I don't want to like say that there is one just so that we're saying there is one. If I did have to say, it does look like we have a skosh of a double top.
Yeah, I'm gonna have to say I don't see much of a pattern on this aside from the double top. And you don't have to see a pattern on every stock that you trade.
Yeah.
A lot of these stocks, we're getting them off price levels, previous day close, previous resistance levels,
Support,
right?
yeah.
It doesn't have to be a chart pattern for everything. Quantran, Amazon, flat top break candidate, pump it. Absolutely. Let's have a look at our friend AMZN. I may have to, withhold any comments here as we do have the Amazonian in the building, and I wouldn't want to step on his toes. Oh, he's not in the building, so I can talk.
You're free. You're free.
No, but for real though, look at the amount
it
of
actually
touches.
does legitimately look.
This
Flat top-ish.
146.50
Whew.
absolutely is a very interesting level here, and you're getting higher low,
Yep.
higher low,
Higher low, higher low.
All the while, you got that 146 general area, 146.50.
That
very
range, yeah, it was really holding.
That range, that's a good look there, Quantran. I do appreciate that comment.
That's a good point.
Yeah, absolutely. Going down here, Sally Huang. Do you have any predictions on the earnings report for NVIDIA? I absolutely do not. NVIDIA, trying to predict what NVIDIA is going to report is a little, I think, would be a bit of a fool's game given what they did the past 2 times around. But what I can say is, they've had a couple of headwinds. Let's be real about it. There's been a lot of embargo talk about, trying to prohibit their A800 and their H800 chips, which were specifically designed for export to China. They were designed to get around the embargoes for that A100 and the H100, which are their flagship chips, the ones that are sold to people in North America looking to scale and make their AI data centers. Those are the chips they're buying, or so I'm told. But yeah, we'll have to see how NVIDIA does. They keep coming out and saying that it's not a big deal for them. That's what Jensen's been saying. Every time we get talk about an embargo and how it's going to affect P&L and this, that, and the other, yeah. We'll have to wait and see. I don't have a prediction either way, nor am I a fundamental investor to begin with. So let's see what we do. But all I know is we're knocking on the door of $500, right? We have a $499.60 high on the day. We're a skosh below 500. We danced with 500 on the 15th. We got into 501.98, essentially 502. But look at that move. We got into 502 there in the pre, and then it was an absolute huadunk. We actually got from 502 to 482. Wow, $20 of range that day. Tell me about the volatility. The Katina man is very pleased with that intraday volatility because he trades these names, right? Why not, man? Let's just say it. But yeah, I don't have a prediction on NVIDIA, but it's going to be great to watch and see what happens there. Very successful story for the year. Anurag, in your breakout NQ trade, how do you set the stop loss? No, my friend, it was not a breakout trade. Who told you about that? This was a trade that I got into because we cleared 16,000 and then used it as a level of support. Let's go to the 5-minute and look at this, okay? So here is a 16,000 point level, right? We get to that level, we reject. We come back down into VWAP. VWAP holds. This would have been an excellent trade to get in here, but we don't. We get above 16,000 and then look at this. We continue to trend sideways using 16,000 as an area of support. All the wicks, every single wick of 16,000 was bought up, and you had no closing prints south of 16,000. So we knew that 16,000 was a previous level of resistance. Now the textbook says resistance becomes support, and did it ever here? Absolutely didn't. That's why we bamboozled our way in, and then we got lucky because there was a nice, 20-year auctions bond. Auction, 20-year Treasury auction at 1 o'clock, and then it absolutely skyrocket to the upside, and we got a 75-point winner. So that was never about taking a breakout trade on the NQ. It was about getting in after a defined level was there and then using that as level as support. Shout out to you, Anurag. Good question. Ozan, gap has a gap fill until 20, if I recall well. Okay? Sounds
Gapping
good.
until 20.
Yeah, it is. All right, keep going down here. Anything? BlackBerry. NVIDIA is expensive. Look what happened last earnings where which were good, but didn't move the stock much the next day. Yeah, it ran to about 500, rejected, but I would say that maybe had something to do with the climate that we were in at the time. The market was, selling, so it was it had been that way for almost 2 earnings seasons where earnings beat in the summer and in the fall, and all of them sold off. So I think it had more to do with the economic climate that we were in as opposed to NVIDIA specific, and that's just my look there. NVIDIA is at high day, by the way.
Woo!
NVIDIA is absolutely rocketing up to that 499.60.
500.
New high day, 499.79. Good look.
Madness.
What you got?
Yeah, I have a little bit of an abysmal Netflix trade that I can chat about. Basically, we could not get the fill. I liked where I got in. I thought, it ended up being a little bit retracey, which is why I left. But basically, we had an upward price channel, to use terminology from earlier today. We had higher highs, we had higher lows. We had this little dip here. I got right at the bottom of the wick, which is my favorite place to get in for a long, as we know. And I wanted to get at the top of this wick, but I just kept missing the fill. It kept skirting lower. I was going to wait and kind of see, because we were holding out around that 476 for a while. That was where I got in. When we kind of saw a little bit of a break below here, I decided, you know what, I'm outie. We lost about 40 cents a share, so it was not the perfect trade. If we continue to see weakness below 476, I might short here, because, in the words of an old Cassie song, we've got a long way to go if we do go to the downside from this point. Because you know what, we're up, and I know we're up on the day, we're up about 2%, but it looks like we could be seeing a bit of a Christmas tree retracement. We have almost a star in the tree here, ironically, where I started my long. And then the star is a little bit reversed, but, pretend it's up here. And now we're kind of heading, I believe, to the downside. But I would like to see a little bit more resistance of this 476 before I decide to dip my toe into the water and join that dive to the downside. But, yeah, I think it looks a bit retracey. It could be an interesting one for scalp plays, keeping an eye on that. And that's another example of sometimes, like we were saying earlier, sometimes you see a pattern and it doesn't come to fruition. That's when you have to know your risk management, right? This did look like we were seeing this consistent higher highs and higher lows, and I wanted to get in rather than thinking it was going to be a retracement, because I was like, you know what, we're up on the day. It could be a longer long. It ended up not being that, so I reacted and I got out. That is my story with this Netflix. Yeah, it is Netflix for a second. I thought it was like the wrong stock. Yeah, that's the story with Netflix. That's why this one's interesting. Also, Zoom is doing an interesting pattern thing here as well with regards to patterns. This one, honestly, we have a flat bottom, but instead of having lower highs, and I'm curious if this is a pattern or if it's just like doing a weird thing, because we have a flat bottom on Zoom, but instead of lower highs, we weirdly have higher highs. And I'm not really sure what kind of pattern this is. If this pattern has a name, let me know, but I will chart it here. And maybe not everything is a pattern, but I just think this is an interesting channel of movement here. I guess maybe it's just upward price channel, but it's interesting that you do have a flat bottom. And then this, I drew this horribly. I apologize. This is not a pretty trend line. But we did have kind of a flat bottom here, and then these higher highs. And it's this consistent movement to the downside as well. So I might short this until we get to around where that flat bottom was, just above the 65.1, because this has been a pretty consistent pattern. But as we've been learning, not all patterns play out, especially ones that I don't even think are real. This is just a pattern I'm happening to notice Zoom making. Because yeah, I'm not sure if flat bottom while the top is moving to the upside is a pattern. But there you go. Yeah. Yeah,
that's a good look. All right, we got 15 minutes or 13 minutes left on the show here, so let's take a chill pill for a second, talk a little football. There was some big games yesterday. I think the best game that started out week 11 was definitely Baltimore-Cincinnati, which was on Thursday. A hell of a game there. Baltimore is the real deal, man. 8-3. They beat Cincy, which, Cincy's a little hurting this year, 5-5, but they definitely had a nice little run. The Cowboys dispatched Carolina in Carolina, as we were expected to do, with a 1-8 team, now 1-9. But that's what good teams do. They beat the teams that they need to beat, and I was pleased as punch about that. Jacksonville back to winning ways after they lost last week. Good win at home against the Titans. I definitely want to see Trevor Lawrence come into the playoffs and see what he's capable of. They're 34-14 there for Jacksonville. The Katina Man's boys are back, baby. They take out the LA Chargers. Nice win by the Katina Man and his boys yesterday by a field goal, 23-20 over Justin Herbert and his LA Chargers. These bad boys apparently were supposed to be a Super Bowl possible contender there. There's the Katina Man, baby. He killing it. Yeah, so that's a good look. New York beat the Commanders. It's a two teams I dislike greatly. But yeah, New York, you know, a lot of was made about New York being crap, and they get a nice win there in Washington, beating them handily, 31-19. That was interesting there. That's Miami continues to win. They're giving Buffalo some trouble there for first in the division in the AFC East. But yeah, it was a good look for Tua. 2013, they win by 1 touchdown there. The other game that I really liked was Detroit-Chicago, a division game, a tough game. Detroit was behind the majority of the game. Goff came back, showing what he's made of, and all of a sudden, you have Detroit 8-2. They haven't been 8-2 since the 1960s, baby. So some stuff happening here with Detroit. 31-26, they won very late in the game, and Cleveland wins again. 13-10, they beat the Steelers, another division game. They're second in their division only because the Ravens are absolutely killing it. They win by a field goal. That was kind of a boring game, 13-10. The 49ers won again, but they beat the Bucs, so that doesn't really count. But yeah, the 49ers finally back to winning ways after losing 3 straight there. And then another good division game between Matt Stafford and Geno Smith, 17-16. LA beats the Seahawks. They beat Seattle by 1 point there, so that was a very interesting game. And then Buffalo absolutely walked all over. There he is. There's my man. There's my man. Absolutely walked all over the Jets, 32-6. I'm happy he's happy. I'm happy he's happy, legit. Like, I just talk smack, but I'm actually happy when his team wins. And then the last game to talk about here, which was the Monday night game. Russell Wilson, excuse you, 21-20. Russell, can you believe the Broncos are now at 500, 5-5, and they're second in the AFC West. So they're quietly making a move here. But yeah, good day of football, no question about that. He's like, speaking of making a move,
R.I.P. Meta.
Take it over.
Yeah, for sure. I'll talk to Meta. Also, because I was seeing some, so yeah, I have been trading today. I saw some stuff in the chat. Someone in the chat mentioning, yeah, I think my thing is too is I don't want to force myself into a trade that I don't see, right? So I'm trying to, I was just in a Netflix trade I just got out of. I was trying to get into, what was it, a Tesla short, but it got away from me. You know, I think it's part of too, I think, is being disciplined and not forcing into trades that, you know, are not necessarily coming to fruition, but I am always, you know, on the eye, keeping my eye out. I also scalp, so usually I won't be in a trade super long. Anywho, but this Meta trade I was in earlier, we were fruitful with half our shares, the other half got a little bit away from us. But yeah, it looks like this short could still be happening. We did have that, this area, like we said earlier, not all indicators are always relevant. In this case, Meta has been, you know, sticking to VWAP like lint on a couch. I don't know, but it's definitely been very closely aligned with VWAP. They are pants. In lint on pants. There we go. I don't know why I used a couch example. That's better. Good. But there we go. The point that we kind of have is that we actually had sort of a flat bottom and a descending wedge earlier. If you want to squint, flat bottom, and then we broke to the downside. Honestly, getting above this VWAP of roughly 338.9, 338, 80-ish has been a struggle for Meta. And so I think this could still, definitely, I'm still interested in this potentially as a short. I'd like to see us break below 338 decisively, which is where I got in the first place. In that case, I will dip my toe into the water. Because we are seeing like lower lows too, right? Lower low. I mean, after the flat bottom, we kind of saw these steady lower lows, which is why I hopped in the short where I did. I would like to see that break of 338, and then I would be very enticed to hop back in a short. But like I said, I really don't want to like rush myself into any trades. Because like we were saying earlier too, just because you see the setup and you see the patterns, doesn't always mean it's going to come to fruition, right? You have to look at volume as well. You have to look at all these other indicators and see if you're comfortable taking a trade, because like we were saying with risk management last week too, part of risk management is being disciplined.
All right, guys. Quickly, I want to talk about 500 here on NVIDIA, because we made a 500 high of day.
Oh my gosh.
Here we go, 499.98. There's big boy size here at 500, guys. So, you know, I'm not telling you to short this. I wouldn't tell you to short something that's up 1.42%. It's very bullish, the chart pattern, or the look on the chart today. Here we go. Here comes 500 again. And there goes 500.
Oh my God.
What a spike up. 562 right back down into 5. Let's see, do we stay above this level? Very, very big movement up. That one spiked very aggressively, 62 pennies, clearing that level. Wow, there's a lot of volatility right now happening on NVDA. Very good look today. We know that they will report later in the week. Christina, man, what day are they reporting?
Tomorrow after
Tomorrow night. Make sure to be on the market recap show with the Katina man. Who do you have tomorrow night? You still deciding?
I know I cleaned it. No one.
He cleaned it. There's nobody coming on this week because we got the NVIDIA earnings, and he's definitely got to be able to focus on that. It's a great little setup there, breaking through 500 in anticipation of earnings tomorrow. Somebody was asking me what I thought they'd be doing. Your guess is as good as mine. We'll see how the embargoes have affected NVIDIA's revenue. We've been seeing people buying hand over fist, but how long does that last? We got to build up the infrastructure for AI before we can have AI, but how much infrastructure are we going to build out? We will find out tomorrow when Jensen gets on the call and we get those reports. But NVIDIA breaking through 500 right now. It's trying to stay above it, using 500 as support on the look. They're up 1.44% with a 562 high. This looks like it's here to stay, at least for the moment. I'm not seeing any other breakouts on any of the other Mag 7. It just looks like it's NVIDIA right now. You've got everything really kind of slowed down here on the other names, including the Fuge, but NVIDIA definitely running. Here it goes into the half dollar. NVIDIA very strong on the day right now, 1.5%. The Katina is printing over there, it looks like. There we go on NVIDIA again. New high a day, 571. It continues to go, guys. NVIDIA very strong to close up the show here, Dara.
Yeah.
Good look for whoever had patience and got this bad boy off the VWAP.
That's beautiful.
Yeah, there you go, baby. Yeah, there it is. There it is. Beautiful look on NVDA on the day, Adara.
Yeah, also, just to kind of, I know we're near the end, but Kendall Lopez brought this up, and it's what we're talking about today, and I love it. Amazon ascending triangle in 5 minutes, maybe? I would concur. I would concur. We were talking about this earlier a bit, too, where we did have this... yeah, I mean, like, we've gotten the 5 minute. We have, you know, this bottom kind of around this 146 area. It's not exact, but we're definitely, it's around that 146. Then we see lower high, or higher high, higher high, higher high. Yeah, it's, wait, no, let me see. I think I'm, like, getting the chart. There we go. Ascending triangle. Okay, so it's actually, this is, I think my brain was, like, getting a little bit confused there. Yes, we do. Good. We have a mostly flattish top here, though. I would agree. Lower, I think I was reversing them and mixing them in my brain. But yeah, lower high, lower high. This is where it looks like we might be breaking a little bit, because this is not necessarily a lower, a higher high. Oh my God, I meant, yeah, sorry, higher low, that's what I meant. I apologize, everyone, I'm getting my words all mixed up here. But the pattern itself does, I mean, like we were saying earlier too, it's not exactly flat top, but it's flat enough. If this 146 holds and doesn't go any lower, then I think that would be, you know, we'd have to see a little bit of a higher high here. But yeah, we've had like about 1, 2, 3, 4 flat top touches. This could be very much one of interest if we break above what seems to be a significant level here of 146.50. Thank you for the patience as I muddled through my words there, everyone.
All-time high, says Mr. Blue, 502.66. Is that an intraday, or you know what I mean, like a wick top? Because let's go to the daily here on NVDA. What is the highest closing print? And we opened up. Okay, so that's inaccurate. The highest high here on NVIDIA is $520. That was made on August 23rd. It was an intraday wick when we got up to that 520. The closing print on that bad boy was 502.13. The next day we gapped up. We opened up at 510.24, and we ended up closing at 468. Okay, so the volatility obviously rampant on NVIDIA, that goes without saying, but we're definitely by no means at all-time highs, at least intraday highs. I would say, you know, we're going to have to get above that 510 with respect to the closing print, because that's where we opened up on the morning of August 24th. We'll have to wait and see. But NVIDIA, an absolute rocket at the moment, and that helped buoy the futures. We're moving up real nice here on this future trade. 1673. We have a high a day on the future of 1676 and a quarter. We're not able to really break through that, although the NVIDIA break of 500 did help push up the future somewhat. I'm seeing a couple of green candles here forming on Amazon, Meta, and Apple. We'll see if they help buoy up this NQ trade. But the NQ now over 1%, outperforming the ES, which is up 0.7. And the Russell, for once, the Russell being outperformed by the NQ, which hasn't been the case in the last couple of weeks now, 0.6 in the green on the RUS. We have 1 minute left on the show, Adara, and then we're going to send it over to the big kahunas, who are going to take you into this power hour time period. And we're already getting great movements. We got great movements intraday. We got that 20-year bond auction.
Yeah, that was
which
crazy.
Shoot up the market. You get that 1 o'clock time print on this show, baby. So make sure to join us every day as we talked about today. The ascending triangle, the descending triangle, and the symmetrical triangle, otherwise known as the ascending wedge, the descending wedge, and a compression pattern, or if you want to call them like I call them, the flat top breakout and the flat bottom breakdown on the chart patterns. Tomorrow we'll be talking about more. Tomorrow we'll be talking about channels. We'll get a bit more basic today. I want to give you some of my favorite patterns on the day.
Yeah.
Tomorrow we'll get a bit more basic. Adara, I'm going to let you send it off.
Yeah, I'm really excited to keep getting into this week. Thank you so much, everyone, for the support as we do this whole new midday. I'm really enjoying it. We're really enjoying it. I hope you guys are too. Now we will be off to the big desk with Brendan. We'll be back tomorrow, same bad time, same bad channel. Brendan's at the big desk.
Hey guys, yeah, welcome back. 2 o'clock on a Monday afternoon here. That's turning into a very positive one once again for the market overall, being led by tech again this afternoon. Here's a few things.